This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What do you say to people scared stiff in cash?
We've got an administration, presumably, that will be pro-business, lower taxes.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr. Off. He's in recovery mode.
Yeah.
I figured he called in about halfway through the third quarter, right?
Said, done. We're not going to see him for a while.
Yeah, we're going to see him.
Take a little time off. All right, so okay.
Lisa Mateo is in today. Survived the weekend. All children accounted for. We welcome all of you across America on your commute this morning on YouTube in America. Worldwide distribution is absolutely stunning. This whole modern YouTube thing. Go out to Bloomberg Podcasts and subscribe to YouTube. We're going to make it short up top here this morning because Rebecca Patterson is anxious to speak strong dollar. Paul, you saw, drone alert, surveillance drone alert. Venus is not a drone.
Venus is not a drone.
Moon is not a drone.
Exactly. And we had a huge moon yesterday. It was phenomenal.
Was it
but anyway,
gorgeous?
yeah, it's just, but I don't know. I'm going to defer to Lisa, our news person here, and Michael Barr and John Tucker, the news people. Is this drone thing a thing? I don't think it's a thing, but I know a lot of people do. So I mean, in New Jersey, Tom, we've got a million issues. Drones are not one of them, in my opinion.
Yeah, we'll see. John Tucker, I'm sure, will weigh in on that. Sitting in for Michael Barr today. We got a coordinated lift. We'll do that with Rebecca Patterson here in a moment. From the Interactive Broker Studios, the Bloomberg Business Flash, Lisa Mateo.
And we've got futures advancing. This is ahead of more economic data out this week, including retail sales out tomorrow, core PCE on Friday. Traders, well, they also have a number of central bank meetings to follow. Yes, the Federal Reserve, but also Bank of Japan and Bank of England. So we have NASDAQ futures up 0.3%, 76 points. Dow futures up 0.1%, 66 points. S&P futures up 0.2%, or 12 points. We have the 2-year yield at 4.22%. That's down 2 basis points. The yield on the 10-year, 4.37%, and that's down 2 basis points. European Chinese stocks slipping. Weaker than expected retail print in China, kind of weighing on sentiment. To currencies, we have the Bloomberg Dollar Spot Index. Well, it snapped a 6-day gain. Bitcoin briefly topped 106,000. That was thanks in part to optimism about MicroStrategy's inclusion in the NASDAQ 100. We have MicroStrategy up about 4%. Palantir will also join the NASDAQ index next week. Its shares are up about 0.3%. And then on the flip side, you have AI server company Supermicrocomputer. They will drop out of the NASDAQ 100. Its shares tanking down about 12%. Checking in with some crypto-linked stocks, we have Coinbase up nearly 2%. Same for Marathon Digital and online brokerage Robinhood up 2%. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. Joining us now to get started, she waltzed in holiday dress. I mean, in your red. How many parties do you have tonight?
Oh my goodness!
Only one. Only one.
Just one party tonight.
Yes.
Joining us, Rebecca Patterson, iconic at J.P. Morgan, of course, her tour of duty at Bridgewater. You came in and you whispered to Paul. You said, "Strong dollar." How strong a dollar?
Well, a lot stronger than consensus has for next year. So most of the big investment banks are looking for weakness in the dollar, especially in the second half of the year. I don't see it. You've got a divergence in interest rates, even though that's somewhat priced in, but it's going to favor the dollar. You have much stronger growth in the U.S., which I think will continue to bring capital to the U.S., which will help the dollar. And in a case where President-elect Trump decides to go hardcore on the tariffs, we've seen historically that tends to be a positive for the dollar and weakness in currencies overseas. So the only case where I think the dollar weakens next year is if the U.S. moderates while the rest of the world is gaining momentum, which moves capital overseas. Possible, but I just don't think the probability is as high as what consensus is suggesting.
So I'm asking you for a friend here, could the euro get to parity?
I think the euro is likely to break through parity next year.
Parity.
So
wow.
there you go.
Okay.
I'm putting it out there.
All right. I mean, for our friends that like to go to Rome and Paris, Lisa, that's a good thing. For those of us who stay in New Jersey, not so much of a thing. All right. Talk to us about the equity markets. I've heard so much discussion over the past month or two about international investors coming to the U.S. market. Is this activity unusual? Is it typical? What do you make of it?
I mean, the risk that I think a lot of people are pointing out is that the U.S. equity market, relative to the rest of the world, has gotten very expensive and heavily owned by foreign investors, international investors, and domestic investors. And so it feels like a drumbeat now of calls that the U.S. is in a bubble, the U.S. could slow down next year, we'll get money going overseas because the valuations are much better. And the thing I always come back to is valuations matter but aren't sufficient. You need a catalyst.
Well, yeah.
And that's what I keep looking for. Does China pull out all the stops and help the consumer? Does Germany get rid of the debt brake, and is that stimulus sufficient? I'm skeptical it is, which makes me think the U.S. can stay the outperformer next year in terms of equities. But I'm watching those risks given where we are.
Well, let's fold the correlated mess. I put out a tweet here. We got DXY through 107. I got 10-year real yield out to 2.03%. To me, the single two sentences of the weekend was a guy named Sam Rowe, always suspect. Sam Rowe channeling Liz Ann Saunders and Kevin Gordon and Charles Schwab on a beautiful scatter dot study that says it's not correlated. You can't take 1 year forward PE multiples like Barron's 101 and say market up or market down. What signals do you take from the equity market that bring you over to bonds, that bring you over to foreign exchange?
That's a great question. So it's to me, there's a chicken and egg situation here. Does the equity market drive the currency? Does the currency drive the equity market and pull in bonds too? They all influence each other, and often it's which one is dominant will be driving, which one is having the bigger move, the greater momentum. So you can see a big move in bonds. If we have a big rise in the 10-year yield that's not purely driven by growth, that can pull equities lower. But we can also see if there's growth optimism about U.S. exceptionalism, the 10-year can go up and stocks go up with it. And the dollar goes up, everything goes up.
You said earlier there's a bubble. I don't see a bubble. Is there a bubble?
No, I did not say there's a bubble. I said there is a
it's
growing...
Monday morning. I'm trying to wake people up.
I want to be clear what I'm saying. The U.S. market is expensive if you look at a 12-month forward price earnings ratio, if you look at EPS growth priced in for next year for U.S. stocks, if you look at ownership. But we know from history, to your point, Tom, that what happened this year has zero correlation with what happens next year. So the market could continue to rise if we have decent growth in the U.S. and there aren't a lot of alternatives for your money. And I think that scenario is probably the most likely one.
How about, we had the election last month here, big changes coming starting in January of 2025 here in U.S. policy. Did you change your outlook at all, or your allocation, or where you want to, find risk in the marketplace?
Yeah, the one thing that I think investors should be really thinking about are scenarios, because we simply don't know yet what President-elect Trump and his administration are going to do in terms of sequencing and size. So when do tariffs happen, and how big are they? What kind of deportation do we see? Those are big downside risks, in my opinion, for the equity market. I don't think they're being priced in right now, but we don't know. And so if you don't know what's going to happen, you have a wider cone of outcomes, you need to be having some hedges in your portfolio. So fine, have fun with financials that are going to benefit from deregulation and growth. Have fun with your digital asset-related assets, so to speak, but then make sure you have a few defensive positions as well in case some of these negatives become reality. So I would look overseas at the UK. I would look overseas possibly at Switzerland. Within the United States, I think things like energy, healthcare, utilities can play a role, not in large size, but some pieces of it, just to give you those hedges for those less friendly scenarios.
Our viewers or listeners have a collective memory of President Trump railing against a strong dollar. Everything you said is against the genetic structure of Donald Trump. He wants a weak dollar to keep U.S. exports going. Are you suggesting that's done?
Trump has gotten a little more balanced in his currency comments over the last few months, and certainly the Treasury Secretary nominee, Scott Bessent, is also more balanced in terms of his view on the dollar. So if the dollar is very strong and we're seeing that hurt exporters in the data, of course we're going to get some tweets or posts or whatever, the president-elect is into that day. But what can he actually do about it? I don't think we have a new Plaza Accord or a Mar-a-Lago Accord. I don't think that's in the cards.
What's the golf course in Scotland he has? Turnberry?
Turnberry.
A Turnberry Accord.
A Turnberry
That's
Accord.
great. Everybody wears kilt.
Yeah.
I can see President-elect in a kilt.
Sure. Talk to us about avocados. What do we need to know?
Okay, so I have been,
What?
yes, we're talking
It's
about
a thing?
avocados. So
That was a Segui. if
Well,
I
watch
ever
this
saw
one,
it.
Tom.
It
Watch
was a
this one.
surveillance Segui. Go.
Exactly.
So you think about risks in the next year, and one risk that I think is on people's radar screens, but maybe not enough, is a resurgence of inflation. And one area I think you want to watch is food inflation. U.S. farmers are struggling right now. They can't get enough workers. And 70% of workers in U.S. farming are immigrants. About half of those are illegal immigrants. If you reduce the workers, you can't get the crops out of the ground, prices go up, profits go down. In addition to that, though, the tariffs are a big hit on U.S. farmers. In 2018-19, that year period alone, they lost $27 billion in export revenue. Now, last time, Trump bailed them out. They got over $80 billion in government subsidies.
Yeah.
This time, they don't have as much free money flowing to hand out. So why do avocados come in the mix? Because 90% of American avocados come from Mexico. And if we don't have people to get those avocados out of the ground here in California, and the tariffs on Mexico are causing some retaliation, avocados are going to become a luxury good. I wrote about it in the New York Times this past week.
I saw it, but Paul, help me here. We didn't know what an avocado was until what, 15 years ago?
The guacamole, the kids with the
It
guac.
was the guac that,
If you want
But
to
now
see
it's like a
angry
mainstay.
Americans, I mean, double the price of guac for Super Bowl, you will have angry voters.
See, I told you. There was
Each
something.
avocado contains 58 milligrams of magnesium.
Sure.
Is there anything bad about avocados? Lisa, come on, Lisa. Get with it.
It's a healthy fat. It's very good for you.
How do you buy avocados? Do you buy them by the bushel at
Yes,
Costco?
I sure do.
Do you really?
I do. I buy
Wow.
the big bag. They come a little bit hard, so you got to kind of put them in the cabinet to let them ripen a little bit. But that's the way to do it.
The budget deficit
Yes.
has widened. This is from your op-ed,
Yes.
isn't it? From 3.9% of gross domestic product in 2018 to 6.4% today, suggesting that maybe the U.S. government will not have the same capability to support farmers in such a scenario.
I mean, they're going to feel pressure to do that for sure. Farms are all across the country, our amber waves of grain, right? So they're going to be pressure, but are they going to find the money? It's going to be harder to find the money this time. Is Elon going to let them have the money?
Right.
Where's the best avocado restaurant in New York City? I have a massive craving right
Okay, Rosa Mexicano,
Yeah.
tabletop guacamole. They come and make it in front of you, and you can customize it. That's
good
still my
margaritas.
go-to.
Yep. Very good. See?
I'm
There's an
now
answer.
now. The font of wisdom.
I'm now in holiday mode. You just
Holiday.
officially got me there.
Exactly.
Rebecca Patterson, thank you so much for joining us. All that you've done for Bloomberg this year as well. Rebecca Patterson, of course, formerly with Bridgewater and a small bank on Park Avenue as well. This is your final interview of the year?
It is indeed. Yes.
All right.
I'm now going over
Is
to.
this your final interview of the year?
Somehow I think I'm here through the end.
Are you
never
moving to
ends.
Europe like everyone else?
No, I'm going to stay here. I'm staying
Very
here.
good.
Resilient.
We're all good.
Thank you. Why did I think I was going to start Monday on avocados? Avocado oil? Really? What do you think?
I don't know. But the
Do you have
kids,
avocado oil?
I don't think I do. No.
Lisa?
I do, yes.
Of course she does. Of course she does.
You
What do
have
you
to.
brush your teeth with it? What do you do with avocado oil?
You cook with it. You have to. If you're
We'll talk
using a
to
little
Javier
bit too
Blas
much of the
about
other
this.
fat, you have to use avocado oil.
There you are, nationwide. Lisa Mateo on avocado oil. Where else are you going to get that? Good morning, Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures advancing as we await this week's interest rate decision from the Federal Reserve. Swap traders now pricing at around 3/4 point rate cuts by the Fed over the next 12 months. We have NASDAQ futures up 0.4%, 96 points. Dow futures up 0.2%, 96 points. And S&P futures up 0.2%, 15 points. The 2-year yield at 4.22%. That's down 2 basis points. The yield on the 10-year, 4.37%, and that's down 2 basis points. To commodities, we have oil slipping. Gold is on the rise. We have the Bloomberg Dollar Spot Index. That's steady right now. Starbucks hired its first ever chief growth officer in China. That's to help boost sales. The company's been struggling with cheaper local rivals in its biggest international market. Also making news, HSBC. It was sued by Australia's market watchdog for failing to protect customers who lost millions of dollars in scams. And finally, sources say LG Electronics considering increasing the value of its Indian unit to as much as $15 billion in a planned Mumbai IPO next year. For on-demand news 24 hours a day, subscribe to Bloomberg News now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. For those of you that read Barron's cover to cover Saturday morning, Farrell does that. I do that. You get the black coffee out. And, you read Barron's cover to cover. You look at Bloomberg markets and that. It's about, end of year, kitchen table, how do we allocate? And a lot of allocation is sort of like marketing and, cute phrases and that. Steve Chivarone, when you're working with Steve Auth, you got to be tough and chiseled. Steve Chivarone joins us now to say senior portfolio manager at Federated Hermes doesn't even describe his intelligence on asset allocation. This is the conversation of the day for those of you figuring out what to do with the pile next year. Is there clarity here? Do you have a belief? Do you have a conviction in your allocation into next year?
Yeah, we do. Probably one of the stronger levels of conviction I think we've had in some time. And what it is, it starts with the yield curve, Tom. We think that the yield curve is going to continue to steepen.
And that's not a bad thing.
No, it's not a bad thing at all.
A lot of people think it is.
Well, it depends on how it steepens. And the way that we see it steepening is short rates coming down. If anything, I think that the market's gotten itself a little bit too hawkish on the Fed. But short rates coming down is somewhere between 3 and 3.5 over the next 18 months. The 10-year staying about where it is. And that means you're really going to like shorter duration assets. That's the 1 to 3 year part of the bond curve, but it's also value stocks, it's also dividend payers, and it's also small caps. I think the one thing that's changed is since Election Day, growth has done better than we would have thought, and it's stealing capital from international developed. And so about a week ago, we went from neutral international developed stocks to underweight, and we neutralized our growth underweight in the U.S. The U.S. is the story here.
So why? And we were just talking with Rebecca Patterson just moments ago about, is this a new story that international money is coming into the U.S. market? Put that in context, because I hadn't really heard about it that much before.
The political situation in Europe is really tough, right? You knew you were going to have gridlock in the UK and France, but now you have a government falling in France. You likely have a government falling in Germany as well. The German economic growth engine is broken. There is no more cheap Russian gas. There is no U.S. kind of free security guarantee, and there is no more endless demand from China. And so when you look at that, you look at the economic data that's weakening, you look at the potential impact of tariffs. Look, at some point there's going to be a contrarian value call in Europe. I don't think it's yet, because as much as the stock market's underperformed, keep in mind, in 2008, the U.S. and European GDPs were equal. They're about where they were. We're up 50%. So this isn't just a market story. This is an economic story.
So that brings you back to the U.S. market. At some point, don't we have a valuation call here on the U.S. market that it's just too expensive? How do you think about that?
So I don't mean to be indelicate, but there's a lot of mealy-mouthness going on about this. So we've got a 7,500 number for 26, okay? We get there on consensus earnings numbers. I don't need to be above the consensus. 275, 310 gets you there. if you look at the valuation part of this, you've got 30% of the S&P is the Mag 7. It's traded between 25 and 30 times. It's at about 28, 29 times. I have it coming down to 27. I've got the rest of the market trading at 19. That's a 21.5 times multiple on consensus earnings. There's your 7,500. So it sounds like that's a big kind of aggressive target.
Ed Yardeni's very good about this as well. And John Stolfus out there with 7,100. They're modeling out these numbers, folks, but if you get the vector out on a log chart, it's what, 6 or 7% growth?
It's not Herculean.
It's not Herculean.
It's really not.
Listen to that. You got to, you know, I mean, if you're federated, you can say Herculean. Let's talk about rebalancing. Yep. What's the biggest charade about the rebalancing thing to make people look busy? Or maybe better said, how do you do it correctly?
You know, it's funny. That was the first question you ever asked me when I first came on.
Because you know how I feel about this.
And I'm going to give you the same answer now that I gave you all those years ago.
Be sure we don't have him next.
Which is, you don't rebalance until you change your mind. If you've got a winner, let it run. That's the story.
Mm-hmm. You like that.
Would you frame, Ari, just frame that quote? You don't rebalance until you change your mind. Gospel.
Yep, there you go. So I sit here today. Where do I find opportunities in this market? A lot of people, I'm probably asking you for your 2025 outlook here. What is the message you're providing to your clients?
The 1 to 3 year part of the curve in fixed income is very attractive to us. You've got yields going in that are the same as longer term. We think short rates come down, so you've got price appreciation, and the economy's strong over the next couple of years, so you get some spread. On the equity side, it's clearly a U.S. story for the time being. Within equities, it's the broadening out trade. It's small caps, it's cyclicals. And then, you know, one of the areas where we're overweight, we increase the overweight next week. I don't know when it works, but the contrarian in us just has to make the call. That's an EM, right? Mm-hmm. You have an impetus for stimulus. You have a need for stimulus. You have a little bit more leverage in pushing back against tariffs. And it's just so darn cheap that if you've got a little bit of capital to throw at something on a contrarian call, that right. Seems about as good of a place as any.
Share buybacks, do they continue? I mean, over the weekend, the zeitgeist was there, you know, I don't want to say record level, but they're buoyant, to say the least.
I think they're buoyant. I mean, my good friend and colleague, Daniel Paris, would love to see a little bit more of that go into dividends and dividend growth. But I think the story here is that outside of the Mag 7, you're trading at an 18, 19 times multiple, which if I'm an investor that's willing to buy those shares, you know, why wouldn't company insiders want to buy those shares? And I think you'll see continued activity on buybacks.
Credit risk, is that something that gets your attention these days, or are the spreads just too tight?
That's the issue. So I think on the short end of the curve, you know, we're willing to take that risk. I think longer term, I'm not all that excited about high yield paper with spreads inside of 300 basis points. I think where you do see some really good credit risk to be able to take is, you know, in the high yield muni space. I think those are attractive. And again, it's really that 1 to 3 year, so ultra short over govies, you know, things like that.
Mm-hmm. Yeah, I'm looking at one of Steve Auth's portfolios. It's just with a Bloomberg globally. It's out of Ireland. I mean, he's in the 86th percentile 5 year. He's in the 82 percentile 3 year. He slacked off. I don't think keep his job. This year he's had an off year. He's in the 95th percentile, and that's because he's not rebalancing like a slave to some formula.
We've had, I'll say, the multi-asset group at Federated and our macro calls, we've had a really good year. What humility says is that ends in 2 weeks and we start again on January 1st. So the calls have been good, but we have to stay vigilant.
So I got 20 seconds. I don't even have that. 10 seconds. Mag 7, you're not selling them into some formula, right?
No. Okay. They're working neutral at worst.
Pirates destined this year?
I'm a Yankee fan, and so
I took Soto in a Mets uniform last week. That was a low point of the week last week.
I agree.
He looked like Lenny Dykstra.
But I'll say this: if you give me Bellinger, Bregman, and Fried, I'll take three good ball players instead of one great one.
Is that enough Yankees talk for the year?
We're going.
Oh wait, the year's almost over. We got to start a Yankees talk.
Start all over again.
Steve Chivarone, absolutely brilliant. I can't say enough. I put it out on YouTube. Chivarone. You don't rebalance until you change your mind. There is the gospel incorporated into Federated Hermes. Futures up 15, nice lift to the market. The VIX churning 14.21. A Fed meeting on Wednesday. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by CME Group, the world's leading derivatives marketplace, offering the widest range of global benchmark products across all major asset classes. CME Group, where risk meets opportunity. All right, we've got futures advancing. Investors looking ahead to the latest Federal Reserve meeting, last Federal Reserve meeting of the year. Surrounding it, more economic data. This morning, it's PMI data. Tomorrow, November retail sales and a read on industrial production. Then Friday, the focus turns to core PCE. We also have more earnings out this week. Micron Technology on Wednesday, followed by FedEx and Nike on Thursday. We have NASDAQ futures up 0.4%, 98 points. Dow futures up 0.2%. Same for S&P futures. The 2-year yield 4.22%, down 2 basis points. The yield on the 10-year 4.36%, and that's down 2 basis points. Bitcoin right now above 103,000. SoftBank, that's in the news. Sources saying its CEO Masayoshi Son will announce today a plan to invest $100 billion in the U.S. over the next next 4 years. That's during a visit with President-elect Donald Trump. And then the Wall Street Journal reporting WHP Global. It's nearing a deal to purchase the wedding dress brand Vera Wang. It's a deal expected to be announced today.
Who's buying that?
And finally, WH Global. Yes, Vera Wang. I know. Yes. And then Skydance. This one's for you, Paul. It's the Skydance deal, sparking more studio protests over its merger with Paramount. Now you have Fuse Media, the latest edition, telling a federal regulator, Paramount chair Shari Redstone, she's going to be overpaid in the deal, and that could harm the media business. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. We'll talk on Warner Brothers Discovery. I want to talk to Paul about that later. What interesting. Lucas Shaw was brilliant. I know Lisa's featuring screen time on the anticipated newspaper segment here, but
very good.
Really interesting out there. Right now, we welcome all of you on YouTube, across the nation on Apple CarPlay, Android Auto. Good morning, 99.1 FM in Washington, where heads are spinning. Off the zeitgeist of the weekend, Henrietta Treyz joins us right now with Veda Partners. She's just been absolutely fabulous. Henrietta, there's really only one question. Are there Republican senators that are going to push against their president? There was confusion over the weekend.
I think there's a lot of things to push back against incoming President Trump over, some of the nominees that he's picked, whether it's Hegseth or RFK Jr. You're starting to see it in individual little baskets. We're dealing with a government funding bill that has not been released yet because it continues and increases federal spending and creates a problem with 80 to 150 House Republican members. So I think they're picking and choosing which areas they want to fight the president over.
So let's go to that issue here. I'm always, when people talk about funding the government and shutdowns, it kind of gets my attention here. Just walk us through the timeline about what our Congress is going to be doing over the next several weeks as it relates to keeping this government open.
Yeah, great question. Right now, they're going to vote on a National Defense Authorization Act, which increases federal spending for that sector by 1% to $884 billion, if I'm not mistaken. It includes, a 14% uptick for junior enlisted servicemen, and that's the package that they'll pass this week while we wait to release the government funding bill, which will similarly increase federal spending by $100 billion, roughly, just to get us into March. So we're kind of trying to clear the decks, but they're not clearing it for any kind of long duration. It's just until about March 14th of 2025, which means almost as soon as we pass this hurdle to keep the government open, we're going to be facing another shutdown early next year, which very likely could get in the way of the Republican agenda around this first smaller reconciliation bill on immigration, defense, and the border. And that's going to be the story of next year. It just starts.
Well, to the mystery of what senators are going to do with the different controversial cabinet picks, is the Tea Party-ish type of the House going to go against their president on March 14th?
I think this is the real issue that we have, which is Speaker Johnson has a 0 vote margin until April, when he's going to have a whopping 2 vote margin. So House Republicans lost seats last election cycle, which is something that doesn't get, I think, reported enough. And that's going to be even more difficult for Speaker Johnson to keep his job and to keep the government open into next year. To answer your question directly, absolutely. I think that the Republicans in the next CR will probably lose 150 House Republican members when they go to keep the government open under President Trump in 2025.
Wow. All right. Wow. So I don't know how that's going to play out. Henrietta, talk to us, I guess, maybe a little bit more immediate in the calendar is some of these nominations that still have to go through congressional approval. Where are we with some of the Mr. Hegseth, Tulsi Gabbard, some of the more controversial ones? What do we know now?
I mean, right now we're doing effectively a pretty serious media lobbying campaign with Hegseth standing next to J.D. Vance and President-elect Trump at an Army-Navy game, obviously trying to project physically that they are all aligned and on board, and encouraging members of the Senate Republican Conference to get on board with passing those members. I think what's going to happen is we're going to see some of these folks get full court press, and President Trump put his weight behind it and say, pass this, give me this nominee. But others, a la Tulsi Gabbard, for example, are going to have a much more difficult time. Right. I keep my eye on the prize. Obviously, I cover macroeconomic policy, so I don't really care about some of those agencies. I really want to see Scott Bessent of the world, Jameson Greer, USTR. Those are much more important to me, and I think those folks are very likely to get through. Those are the ones who will be putting tariffs on next year. I think that's the prize.
And now, folks, the Civic's dumb question of the week. Let's get it out of the way early here on a Monday. Henrietta Treyz, with the senators' vote, are their votes visible, or are they like by a ballot box where they're secret?
Oh, no, absolutely visible. You can watch this all on C-SPAN. It's great family fun. Highly recommend it.
Debt ceiling.
She's such a nerd.
I know. Debt ceiling, deficits. I mean, we've got the clock here in Manhattan that shows us the deficits. Does anybody care in Washington, D.C.? Should they care?
Oh, they talk about caring, for sure. Everybody's against deficits, that's for sure. But you're not against specific spending cuts. You're not for specific spending cuts. It's much easier to be against things than for them. So while we talk about, being against federal spending, let's be mindful that we have to increase the debt ceiling next year. And Lindsey Graham, the incoming Senate Budget Committee chairman, notified us last week that the debt ceiling, which could pass on party lines with just Republican support and a reconciliation bill, will instead go through regular order. And that is acknowledgement that they will not be cutting federal spending next year. It is far too difficult a task, especially when you have a 0-seat margin in the House and only 3 seats in the Senate.
How about on the tax front here? How do we think this is going to play out?
On the tax front, I think it's clear from incoming leader Thune's agenda that we will not get a tax bill until December of 2025. We are going to have a massive fight over, the SALT deduction, over repealing the IRA tax credits for burgeoning industries in clean energy, solar, wind, batteries, et cetera. It's popular to say that we're going to repeal the electric vehicles tax credit, for example, but that's about $120 billion in the broader IRA, which has ballooned, as you know, from a bill that they expected to be about $200 billion in private sector uptake to $780 billion, because we've grown these industries, some up in Boston, Texas, Ohio, North Dakota, South Dakota. It's very bipartisan and disproportionately in red states. About 70% of that funding is for red states.
What's interesting here, Henrietta, and I've got to squeeze this in, the SALT tax, is this called... Is a stereotype that it's just about Democratic states, or can Mr. Trump get pressure on the SALT tax from Republican states?
That's a great question. As you know, I live down here in Louisiana. There are beautiful, nice streets down here where people are paying, exorbitant property taxes and mortgages. That's in Texas. That's in every state in our great nation. There's big homes that people want this deduction for. So I think a lot of it weighs on the New York, New Jersey, Connecticut, California Republican contingent. And the reason that's easy is because those are seats that President-elect Trump and the Republican Party have picked up in the last 10 years. And so they really highlight those members. And frankly, those members are on the hook for fixing this for their constituents. That's what they got to do.
John, we go to John Tucker, official SALT tax correspondent for Bloomberg Surveillance. Do you agree with Henrietta, John, that there's enough Republican victors, if you will, within these states where SALT tax actually could be amended, like they could raise it $1,000?
Well, they can actually pay for it now by imposing congestion pricing on drones.
Yes.
Is that how they're going to do it?
That's how they're going to do it.
Yeah, I mean, you got to think these things through, guys.
Okay,
See,
sorry.
John bringing it all together.
A congestion tax on Venus, that'll work out. Henrietta Treyz, thank you so much for your perspective. Can't say enough. From Louisiana today, which is wonderful. She is with Veda Partners. Every time she's on, I learn stuff I didn't know.
I know.
Every single time. It's just great. Futures up 14. Really interesting correlated lift to the market right now. American oil, $70, 65 cents a barrel. The Sweeney yield in a little bit, 4.23%.
Yep.
With our news in New York City, John Tucker.
All right, let's start with this one. SoftBank Group CEO and legendary deep-pocketed investor Masayoshi Son is set to announce a plan to invest $100 billion in the U.S. over the next 4 years. Our sources telling us it'll come during a visit with President-elect Donald Trump today. Son will pledge to create 100,000 jobs focused on artificial intelligence and related infrastructure. With the latest on the recent drone sightings, after dozens of unidentified drones have been seen flying throughout the Northeast in recent weeks. Senator Chuck Schumer is getting in on the act, calling on the Department of Homeland Security to deploy drone detection technology in New York and New Jersey.
If the technology exists for a drone to make it up into the sky, there certainly is the technology that can track the craft with precision. and determine what the heck is going on.
Senator Schumer also says he's working to pass a bill in the Senate that would give local law enforcement more tools for detecting drones. Germany's Chancellor Olaf Scholz will submit to a parliamentary vote of confidence today, which he intends to lose. That'll trigger an early election. Scholz's ruling coalition was dismantled last month after he fired the finance minister, leaving him without a parliamentary majority and forcing the early vote. Now, Bloomberg's Oliver Crook has details.
At 1 p.m. here in Berlin at the Bundestag, Chancellor Scholz will speak before the Bundestag. He will give a 25-minute speech. That will be followed by 2 hours of debate, then a roll call vote. Then we get the result by about 4 p.m., which he is widely anticipated to lose, which he is intending, in fact, to lose, in order to set up basically the election on February 23rd.
Bloomberg's Oliver Crook says the political collapse comes as the country's economy is now 5% smaller than it would have been if the pre-pandemic growth trend had been maintained. And France's new Prime Minister, François Bayrou's meeting with Marine Le Pen this morning left the far-right leader more positive on his methods, even as she said it wasn't clear yet if the talks were useful. Le Pen's discussion with Bayrou was just the first of several the Prime Minister is holding today with different political groups in Parliament. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker. This is Bloomberg. Good Lord.
Michael Barr he's so shattered by that game. They scored 90 points. He was dead on about that.
Yeah, unbelievable.
He absolutely nailed that.
Yeah, we don't see that in New York football very.
No, we don't.
No,
we don't. I watched I watched like 3 minutes of Giants.
Yep, it's about all you need.
Painful.
The Jets did everything they could to try and lose that game. They won despite themselves.
Yes.
I don't know much about it, Paul. You're way up to speed on this, but the schedule clearly faces the Buffalo Bills.
Well, the Bill.
They play the Patriots and the Jets.
I mean, I thought we kind of almost had a preview of the Super Bowl yesterday.
Yeah,
it was a great game.
You think so?
Yeah, it was good. I mean, but Josh Allen, boy, he can do it all. Guy's really coming into his own.
He can run,
he's just total elite.
That's great.
Kind of just reminds us what we don't have in the Giants and the Jets.
Somebody said, why the Bills? And the answer is I got a phone call, I think I was a junior in high school. There's this guy from USC. He's playing a preseason game in the old Dumpy Stadium in Buffalo.
Yeah.
And I stood up. I could wave to Toronto in the distance.
Right.
And I watched O.J. Simpson in like his first. He came in the game late, and you could tell he was special.
Yeah. Yeah. Absolutely. Absolutely.
We didn't take a white Bronco to the game.
No, we did not.
We did not do that.
Yeah, the Bills are, I think, one of the teams to beat. That's for sure. Good for them.
Let's see. But Barr's not here.
No, he's licking the wounds.
He's taking a well-deserved vacation this week.
Okay. All right.
So I have to.
So
do
this
his
is
job
predetermined. Okay, this is all right. Very good.
Well, he's on sabbatical helping the defensive line of
Yeah.
the Lions. That worked out.
Yeah.
90 points. I mean, that's a.
That
are we
fun
going to have
football.
a 100-point game?
Sure, why not? Yeah. All the rules that protect the quarterback and the wide receiver.
We're just extended time so Lisa can prepare for the newspapers. I mean,
Coming up in just moments.
Extend.
Sponsored.
This is Bloomberg Surveillance. Stay with us.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures on the rise in this final week of trading in 2024. Right now, NASDAQ futures up 0.4%, 91 points. Dow futures up 0.2%, 94 points. We have S&P futures rising 0.2%, or 14 points. The two-year yield 4.22%. That's down 2 basis points. The yield on the 10-year 4.37%. That's down 2 basis points. The commodities, we have oil slipping. Brent crude down about 0.7%, $73 a barrel. WTI crude $70 a barrel, and gold on the rise. Spot gold higher at $2,659 an ounce. Few companies making news. The Wall Street Journal reporting Boston-based regional banks Berkshire Hills Bancorp and also Brookline Bancorp are in talks to merge. And the defunct British American watch brand Denizen, it's been revived. It has a new line of affordable quartz timepieces. If it's on a Christmas list, there you go. It's priced anywhere from $490 to $690. That is your Bloomberg Business Flash. Paul and Tom.
Thanks so much, Lisa. Greatly appreciate that. Paul, what do you do when you have a movie that bombs? Oof. What happens? Kraven the Hunter.
Yeah.
I watched it.
Did you go see that, Lisa?
I totally did. I have a new crush.
Really? So the Rock is out?
The Rock has been set aside.
The Rock is out.
You're not going to go see the red one, right?
No, I did see it at home because it's already streaming. Can you believe it? Yep. Yeah, it's already went to streaming.
Paul, that's amazing.
I know.
What they have to pay the Rock to do that? And day one, it's out on YouTube.
Well, they're going to try to recoup it. Yeah, try to recoup it in the streaming world. So
Kraven the Hunter brought in $3 million stretching it.
Yep.
To date, 11 million. Yeah. It went from 90 to 100+ million cost.
Yeah.
What happens?
Producers in trouble, the directors in trouble, all the talent's in trouble. Anybody who greenlit this studio is in trouble, and good luck trying to get something else done.
Up the food chain, people lose their jobs?
Yeah, I mean, it's again, the producer's going to have a hard time coming back to that studio again. The talent's going to take a little bit of a hit, but you just move on. I mean, they'll figure out ways to get some more revenue out of this thing. But yeah, not good.
Moana, 337 million.
Crushing it.
I think that's just domestic.
Yeah.
Doesn't include France. Interesting.
Yeah.
You saw Kraven the Hunter?
I did.
And who's the new dude?
His last name is Johnson.
Okay.
Okay, that's enough right there. The Rock's brother.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
Bloomberg Surveillance and our front page is the Lisa Mateo Hour. It's brought to you by IBKR Financial Advisors. Switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interests at ibkr.com/RIA. We thank you, IBKR, as we also thank Aaron Taylor Johnson for helping out getting Lisa in here this weekend. What do you got, Lisa?
Some new Apple tech that's going to be coming out. This is from the Wall Street Journal and Bloomberg. Both of them reporting starting next year, they're going to introduce an iPhone that's thinner. So in case you have the one you have, it'll be a little bit thinner. It's intended to be cheaper than the Pro models. So that's a bonus because it's going to have this simplified camera system, and that's reducing their costs. On top of that, foldable devices. That's like the hot new thing. So now they want to plan two. One for a bigger device, one for a smaller device. Bloomberg reporting it's kind of like an iPad foldable. The problem is that they have to improve the hinge that actually allows it to fold. That's been having some issues. But it's also rethinking the mouse. The next AirTag, those ones that sometimes you put on your luggage, it's going to have a wider range. So it can find things a little bit further away. And then it's going to shift to an in-house Wi-Fi chip.
Really?
All this stuff kind of coming out
next year. Do you
use
the AirTag thing?
I don't, but I know a couple people who do, and it's kind of scary because they're tracking
people
without their knowledge.
Oh, without their knowledge.
They're going to slip it in someone's bag.
Oh,
that's
I see.
That's not very
Yeah,
nice.
yeah.
But no, parents use it on their kids, like on their backpacks and
Yep.
stuff.
Yep.
So it's being used a lot.
Okay.
Okay.
Good. Apple's all
Why
over
do
the
I need a
have it.
foldable phone?
Just
To be
on
cool.
cutting
Is
edge.
it like
Cutting
kids?
edge.
It's like a kid's thing, right?
No, a lot of adults are using it, but it's the new, that's the new hot thing. So now they have to adjust to the times, and they have to find a tech gadget that's similar to it.
Okay, very good.
I know,
Next,
Apple, new tech.
Yep.
So you've heard about the problems with school districts cutting back on bus service, right? So now parents are turning to rideshare apps to get their kids to school. This was in the Associated Press. It's interesting. It's not Uber and Lyft that we're talking about. It's new startups. One's called Piggyback Network. So parents book the ride for the kids online with another parent traveling in the same direction. So that's the idea of one of them. Another is Hop Skip Drive. So these are all these startups that are beginning because parents are having trouble finding ways to get their kids to school.
Now, does your town have
luxury.
buses?
We do not. No.
We do not in my town. But presumably for the elementary schools, you lived close by. They had all over town, so you lived close by, you could walk. That's fine. But then the middle school and the high school, not so much. So you drive by the high school at pickup time, it's a disaster as all these parents are there lined up. I'm like, where are the buses?
Yeah.
Anyway, all right.
Yeah, no, but that's a problem. So now they're going to these apps. I mean, the
My
question
kids
is
walk
it
them.
safe?
Right.
So they can claim to like screen the drivers, check their fingerprints,
but-
things like that.
But help me here in the suburbs.
Yes.
Folks, suburbs for me are 34th Street. In the suburbs, you don't have a lot of Ubers. I mean, if you have a given high school getting out, there's just flat out not enough cars to
And that's
service.
why they're starting these new startups.
Yeah, okay.
These startup apps.
Some
of them
my kids just walked.
they just walked.
We walked a long way.
Maybe in bad weather we'd go pick them up.
Yeah. I mean, I remember
I used to
going
walk.
I remember going through 2 feet of snow.
Up
my
a
father
mountain?
was evil. No, but it was like normal that everybody did that.
Yeah, but
Now they got to be, what, you got me a black car and not an SUV? Next.
Oh gosh. Okay, so if you're not the life of the party, if maybe you're a dull person,
Me, look, I'm
definitely
drumming that
not
camp.
Sweeney.
I'm not.
There is a social club just for those type of people. It is called the Dull Men's Club. The Washington Post has a great article kind of looking into it, that it started back in 1988, but how it's grown. Like it's now includes women. It has like 1.5 million members about posting about their adventures on their Facebook page. So what's an adventure for a dull person? Okay,
Right.
so they collect milk bottles. So they write about that. They take out their trash, what kind of potholes they've seen, what food they've ate.
Wow, I thought I
It's
was
the
there.
happening place. They even have a calendar that they put out with pictures of their members next to things that they have fun doing.
Okay.
It's a hot seller. It's a hot item.
They get Albert Einstein here
Oh no.
saying a calm and modest life instead of constant restlessness, like going to see the Eagles at the Sphere.
Boom.
Albert
book the-
Einstein.
Just book the flights.
Exactly.
We're all
You
set.
did.
Yep.
Okay.
I
The
did.
Dull
Mandalay
Men's
Bay.
Club.
We live-
I'm a charter member, right? Thank you. It's good to know that.
We live vicariously through you, Sweeney. Okay, last one. Stick with Hollywood. They're starting to embrace Saudi Arabia. This was in screen time. I'm still kind of going through it. But Lucas Shaw, basically, earlier this month, he went to Jeddah for the Red Sea Film Festival.
Of course he did.
Yes, he did. Vin Diesel, Emily Blunt received awards. Spike Lee, Minnie Driver served on the jury. So Shaw says that Hollywood is starting to embrace Saudi Arabia because you have that pullback in spending across media, entertainment. It's prompting people in search for money in places they never thought of, like Saudi Arabia. Why? Well, there was one thing here. The country's offering incentives, a rebate of about 40% to film in Saudi Arabia. So that's one of the draws there. But they've really been dumping a lot of money. You've had the money going into golf, video game places, building
World
$1.5
Cup as
trillion
well.
futuristic city. So it's starting to grow. So they're saying this might be the new place to start filming movies.
I of course read Lucas the moment it comes out, and there's some Hollywood pushback.
Of course,
Like saying,
of course.
do we really want to do this?
Correct.
Yeah, but at the end of the day, money.
That's what it comes down
exactly.
to.
Let's
You
be
think
honest.
so?
And it's Hollywood, so I mean,
It's
you know,
Hollywood. You had
they'll
Johnny
take
Depp,
money.
Guy Ritchie, like they've, shot projects there. And they say they're going to go back.
So Johnny Depp is back, right? Is he back to making movies and stuff? I guess.
Johnny Depp? Yeah.
All right, very good.
Okay. Brought to you by Aaron Taylor Johnson. Thank you so much, Craven the Hunter. See it in theaters this week. Only you, Lisa.
Yeah.
She's
big. She goes to the theaters.
Huge.
Yeah.
Did you see pictures of this gentleman?
No, I
All right, so let me.
He's going to Google
what's
up.
his name?
Aaron Taylor Johnson.
Aaron. All right, go ahead.
Right.
We'll figure it out.
Craven.
Lisa Mateo on the newspapers. Thank you so much.
Oh. Okay.
Rebecca Patterson for Rebecca. We're
I know this
playing
dude.
holiday music. Dino.
Finally kiss goodnight. How I'll hate going out in the storm. But But if you really grab me tight, all the way home I'll be warm. Oh, the fire is slowly dying, and my dear, we're still goodbye. But as long as you love me so, let it snow, let it snow, let it snow.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
I'm sorry, it's a boom economy, and that's what we're adjusting to.
Neither party seems to want to take on deficits at all.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr on assignment, recovering from the Lions debacle. Lisa Mateo with us this morning. John Tucker in for Michael Barr. That's a good thing as well. We welcome all of you across the nation, your morning commute, all the way up I-91 exit 4, Putney, Vermont. Good morning, Putney, Vermont, up to Killington and Points. It gets so far north up there. You get up to Cabot, Cheese. They're making the cow. There's more cows than people up in northern Vermont. Good morning, Vermont, as well, because they're not listening to 92.9. It doesn't reach from Boston.
No.
They're like they're looking at Lake Champlain.
Satellites.
And that. Our next guest went to Putney, which is a good, very cool thing. Very, very cool school. We're going to keep you informed here into the Fed meeting here and the information today, Paul. We got a lift in the market. I mean, there's no other way to put it. Did you see Bitcoin? It printed a 106.
I know. I mean, Matt Miller out there just coining it for the Bitcoin. But, it's a risk-on asset, Tom, and people, the animal spirits are out there. And that's just a representation
10-year
of
real
it.
yield higher
ETFs are buying
as well.
them like crazy.
And we got Balchunas coming in, we hope.
We hope.
Get your watch out. She's barely awake.
I'm tracking the Acela train as we speak.
Are you? You got the Apple AirTag Lisa was talking about.
We put it in his backpack.
Attached to his backpack. We'll see if we get Balchunas in here late. We've got a really important guest to start out with because he has been right about optimism on American growth. Lakshman Hachathan will be with us here in a moment. Bloomberg Surveillance this morning, we're brought to you by Cohn-Resnick Advisory Assurance Tax. Discover optimization strategies that are helping CFOs make their finance function more competitive, more resilient. Talk to Cohn-Resnick's advisors, and we thank them for charter support, like we thank Lakshman as well at Equity. We'll get to that in a moment. From the Interactive Brokers Studios with our Bloomberg Business Flash, Lisa Taylor Johnson.
Thank you. Good morning. We have futures pointing to a higher open right now. This is ahead of more economic data out this week, including retail sales out tomorrow. We have core PCE on Friday. Traders also have a number of central bank meetings to follow, including, yes, the Federal Reserve, but also the Bank of Japan and the Bank of England. So we have NASDAQ futures up 0.4%, 89 points. Dow futures up 0.1%, 82 points. S&P futures up 0.2% or 14 points. The two-year yield 4.22%. That's down 2 basis points. The yield yield on the 10-year, 4.37%, and that's down 2 basis points. European Chinese stocks slipping, weaker than expected retail print in China, weighing on sentiment. Then you have the Bloomberg Dollar Spot Index. That snapped a 6-day gain. Right now, it is little changed. Bitcoin briefly topped 106,000. That was a fresh record, thanks in part to optimism about MicroStrategy's inclusion in the NASDAQ 100. MicroStrategy up 3%. Palantir also joining the NASDAQ index next week. AI server company Super Microcomputer, though, they will drop out of the NASDAQ 100. Its shares are down about 13%. Crypto-linked stocks. Coinbase up nearly 1%. Mara Holdings up 2%. That is your Bloomberg Business Flash. Paul and Tom.
Listen, Matteo, thanks so much. Lachlan Artisan's with us. Last time was brilliant. Got a huge response to the discussion of his approach, cycle research, going back to the 30s, and frankly, even back farther than that at ECRI, Economic Cycle Research Institute. Forget about forward. With you, I want to look back. What did you see 12 or 18 months ago in your cycle research that pushed against OMG slowing growth, OMG NBER recession? What were the indicators you had that was growth optimism that you nailed?
Well, there's several, right? The whole thing is there's no one leading index, so we're looking at many leading indexes. The discretionary side of the economy was cycling down 18 months ago, pretty hard. You saw that. However, the non-discretionary part of the economy was holding in very, very tightly inside of a backdrop of labor hoarding, where you couldn't fire anybody because everybody was freaked out for a whole bunch of reasons of structural things in the labor market. And as a result, you never could get the hard landing with recessionary job losses, and we've come off of that. The leading indicators last spring became much more constructive. That's where the word resilience came from. And now it's even in your ad. I just heard it a moment ago.
Lisa had a tantrum and said we need more resilience.
So resilience abounds. And I got to tell you, in the forward-looking data, it continues. So last year, 2024, GDP, look, it was 2.8 in Q3. It looks like it's going to print above 3 in Q4, according to Atlanta Fed. Inflation's been sticky. It's really weird. I just want to, riff off of Putney for a minute. You see the forest for the trees. Let's step back for a second and look at, you've got a rate cut of a 1/4 point sitting on the table because policy is overly restrictive, with Bitcoin tagging above 100, and the market up 25% for the last 2 years, S&P. So if that's what restrictive looks like, what does less restrictive look like?
How about this K-shaped economy?
Yeah.
It's a real thing. How problematic is it for the U.S.?
Look, it's a problem if you're on the lower end of the K, let's be clear. And so if you have assets, they're inflating, you're okay, thank you. If you're on the lower end of the K and you're working for a paycheck to make the bills work each week, it's extremely tight. Is it a hard landing? No, because you're not seeing recessionary job losses. It's just not there. And as a result, as uncomfortable as it is, food prices are up, so everybody's going to go on a diet if you're on the lower end of the K. But it's not a recession. And that's the objective reality at the moment. Whether or not it's right or wrong is a separate question.
2025, what's your outlook just for this economy? What are you looking for next year?
I got volatility, but for a lot of reasons, not the obvious ones. I think a lot of people are looking at policy in the incoming Trump administration. I'm looking at, we've had this global industrial growth downturn for a couple of years. It's tagging China. It's tagging Europe. You just heard it. Maybe that comes to an end. I'm watching for that. That's a huge call. The second thing is everybody's betting inflation is up in 2025. I'm unsure. I'm going to watch the forward-looking indicators, the future inflation gauge, because if you remember 2018, you had a huge tax cut, you had tariffs coming on, and our future inflation gauge went down when the Fed was tightening.
I'm looking at LL Bean boots because I got to bust Lachman about this when we're done. But do you parse like conventional studies, service sector inflation versus goods disinflation or outright deflation?
Yeah, no.
What do you see there?
Well, just what you said. Just what you said. You've got services sticky, non-discretionary spending, education, health, it's very sticky. Goods can still be to the downside. We've got a whole trade situation, which you guys have talked about, which is going on. Global industrial growth bottoming is a game changer if it happens. Let's check in next month and keep asking this question. But if it happens, that takes away some global goods deflation. And we have to keep an eye on China. It's a mess. China's a mess. Our leading indicators there have said that, and they continue to say that. They're not out of the woods, and that's a deflationary impulse globally.
Inflation sticky, as you phrased it earlier, problematically sticky, or okay?
No, it doesn't seem to be. With it where it is now, the Fed is like, hey, I'm too restrictive, I'm going to ease, and you've got the markets on a tear. So and people aren't being fired, right? So is it a problem if it hangs out here? No. If it breaks out up or down, that gets interesting. Everybody is leaning towards up. I'm going to not predict the predictors. I'm going to watch the future inflation gauge because it went down in the fall of 18 when the Fed made a huge mistake.
What do you do on the debt in deficit? Does Cycle Research consider that?
Well, there I have to, of course it considers it. Money and credit are huge drivers of the cycle. The issue is where are the bond market vigilantes? What's interesting is U.S. debt it takes a higher yield than the Chinese debt, but the Chinese, the domestic people are buying the debt, and we have a huge spread. That's interesting. Okay. I want to see what happens on this global cycle stuff in 2025. I think it's volatile.
When you were at Putney, on a cold winter's day, there's 4 inches of snow and it
got a lot colder.
Are you styling with flip flops, or did you go with the
Sorels.
engineer LL Bean boot? Or the huge ones, Paul. They go halfway to your knee.
You
the
need the
16-inch boots.
You need the huge ones, the Sorels, the LL Bean. If you had the boiled leather insert, boiled wool insert.
Yeah, I remember that.
You were a little better, but not enough.
But you went to Sorel.
You had to go.
Yeah, you had to go
to Sorel.
Okay, there we go. News you can use.
Yep, exactly.
Thank you so much for that. The Economic Cycle Research Institute. Futures up 13. The VIX 14.28. Plain and simple. The 10-year real yield 2.02%. More elevated. With our news in New York City, here's John Tucker.
All right, Tom, Paul, and Lisa Moore at President-elect Trump's controversial cabinet picks scheduled to meet with Senate Republicans on Capitol Hill this week, including Robert F. Kennedy Jr. for Health and Human Services and Tulsi Gabbard as Director of National Intelligence. This comes after key Senate Republican Joni Ernst changed her tune on another divisive pick, Pete Hegseth, to lead the Defense Department. Bloomberg's Kayla Gardner has more from Washington.
Originally, she suggested that she was not yet ready to support Hegseth. And then we saw this pressure campaign really play out. We saw ads on Fox News by this Elon Musk-backed group. We also saw her receive a primary challenge in her own state. She's expected to run for re-election in 2026. So we have seen her drastically shift over the last few days.
Bloomberg's Kayla Gardner in the nation's capital. SoftBank Group CEO Masayoshi Son is set to announce a plan to invest $100 billion in the U.S. over the next 4 years during a visit with President-elect Donald Trump. That's according to a person familiar with the matter. Son will give details of the plan, which includes a pledge to create 100,000 jobs focused on artificial intelligence and related infrastructure later today. Luigi Mangione may be in New York City very soon, just weeks after authorities say he fled the city, leading police on a days-long manhunt following the murder of health insurance CEO Brian Thompson. Mangione is in a Pennsylvania prison, and extradition could be happening soon. He was arrested in Altoona last week, 5 days after Thompson was gunned down. ABC says Mangione's mother spoke with FBI agents and detectives from the NYPD. The day before his arrest, she indicated the surveillance photos being circulated at the time could be her son. And finally, Dick Van Dyke has 99 reasons to celebrate. The beloved actor just marked his 99th birthday this week. He lives in Malibu, right where those fast-spreading wildfires were sweeping through. He was actually using his own garden hose to douse his house when he was overcome by the heat and the encroaching Franklin fire. His neighbors rushed in along with the firefighters.
I couldn't get up, and they had to pick me up and carry me to the car.
was house still stands, and his cat Bobo was also found unharmed. Global news, 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker. This is Bloomberg.
Thank you for that. Story. I can't convey to those younger the wallop of Mary Poppins when it came out. It was, there was all sorts of politics with Julie and My Fair Lady, Audrey Hepburn, Julie, and it was a huge thing. And they just created it with a firestorm of, debate and all that. And they had this, put Dick Van Dyke in, he'll be okay. And he's got, I love the bank scene where he's the old banker.
I'll always remember him as Rob. Oh, Rob.
Oh, yeah, with Mary Tyler Moore. Yeah, I did the video the other day on Twitter where she does the pool shot, the billiard shot. Very classic to say, at least. Dick Van Dyke is 99. Futures up 15. The VIX 14.25. We're on YouTube. Please subscribe to Bloomberg Podcasts, our new distribution on YouTube.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures pointing to a higher open. We're awaiting this week's interest rate decision from the Federal Reserve. Goldman Sachs economists say they expect a 25 basis point reduction from the Fed this week, followed by a pause in January. So we have NASDAQ futures up 0.4%, 103 points. Dow futures up 0.1%, 86 points. S&P futures rising 0.2%, 16 points. The 2-year yield, 4.22%, down 2 basis points. The yield on the 10-year, 4.37%, and that's down 3 basis points. To commodities, oil slipping, gold is on the rise, with the Bloomberg Dollar Spot Index is little changed. A few companies making news. I'll start with Starbucks. It's boosting its paid parental leave for in-store workers from 6 weeks to 18 weeks for birth parents, 100% of their average pay. A parent who doesn't give birth will get 12 weeks. That takes place in March, those changes. HSBC, they're being sued by Australia's market watchdog, failing to protect customers who lost millions of dollars in scams. And finally, I thought this was interesting. One of the toughest tables to book in Paris. No, it's not one with a Michelin star. Bloomberg reporting it's the Bistro Chez Remy in Disneyland, Paris.
Oh, please.
Yes, Tom, you got to go. It's an homage to the Disney film Ratatouille. Dinner reservations booked out 2 months in advance. For on-demand news 24 hours a day, subscribe to Bloomberg News now, wherever you get your podcasts.
That wonderful movie, let me extend that. I actually looked at a very fancy restaurant that was the restaurant that the movie was based on. Mm-hmm. They are completely booked into January. I sent them a note and I said, can you put us on the waiting list? We'll eat in the kitchen if we have to with the rats. We'll see. La Tour d'Argent, which is iconic. Nice. And, it's very reasonable, actually, given how iconic it is. And Paul and Charlie Pellet, Surveillance Europe on $5 a day correspondent, has been brilliant on this. The boom in travel is just unreal.
We just booked our Italy trip this weekend, and there weren't that many spots left for what we want to do in September of 25.
Yeah, you going into Milan?
No, because I've been to Milan 15 times.
Yeah, for business.
So now I'm just going to go see the rest of the country.
Great. So. Yeah, but I'll tell you, folks, it's something. And I would say we've got Steve Trent coming up later with Citi on the Airlines. Yep. And I mean, I think the guidance, Paul, press release to press release is oops, it's actually better than we thought.
You're exactly. I think you're right, Tom.
And we'll have to see. On that. Rebecca Patterson with us earlier. We've completely shifted our songs in honor of Miss Patterson. She demanded that we only do holiday music, so we'll be doing that for you. Really sort of the final week of the year. There'll be much more after this Fed meeting that we see on Wednesday. But, all in all, it's going to be interesting to say the least. I put out a tweet earlier, and what you've got on a Monday morning as you wake up across the nation is risk on. Paul, help me here. A correlation here of our data check. We can do that on the Bloomberg. I'm going to begin with 2.03% on a 10-year real yield. We've gone, 195 up to a 203 on that.
Yeah, on your real yield, Tom. I mean, futures looking a little bit of a lift here today. S&P up about 0.25%. NASDAQ doing a little bit better, Tom, up about 0.5% on
enough. Come on.
Just enough. That's fine.
We're addicted to lifts there. When was the last time we had a 1%? 330 in the afternoon.
Yeah, exactly.
OMG, we're down 1%.
Exactly. I mean, you can't think back. It's been, back to the summer when we had a little bit of a pullback in this market here. And WTI crude oil is sitting right here at $70, 70 cents a barrel. It seems like the range here, right here, for oil. And it costs them $50 to get it out of the ground in Texas. So I guess our friends down in Texas are still happy.
Lots of measured optimism. Great to have Lachman Achathan with us, who nailed the growthiness of America. But there are tea leaves out there. We can make jokes with Damien. Worst in his rotisserie league. I brought in my Bills hat here, Damien, for Michael Barr. That was a great game and all that, but that's too serious to talk about your world right now. I've got Brazilian real at 6.
Okay.
I looked at Indonesia. I looked at Singapore. I looked at Philippines. I'm the amateur. Is EM unraveling?
Well, let's take a minute to reflect. It's the holiday season, Tom. Let's reflect on 2024, guys. What did we get right? We got right EM credit, 7 to 8% return this year, but that doesn't take into effect what Tom's talking about with the currency impact. And we got that wrong. We were looking for something on the order of give or take 1 to 2% of EM FX appreciation, and we got 6.5% of downside.
6.5% downside.
Yeah,
so
I mean, look. The reality is we were a little bit bullish, which I don't know. I made a mint in this business, Tom, for the past 30 years being bullish on the dollar versus EM currencies, but I don't know, something in me, maybe I got a little over my skis last year, but that's kind of what happened. It's been a dollar strengthening story, and I don't foresee that changing in the next year. I see runway for the dollar to appreciate.
If real goes to 650, Indonesia goes through, a la Stanley Fischer 1998, is there a point where President Trump is overcome by events with strong dollar?
Well, promises versus policy when it comes to President Trump, right? But I guess you're right. The prudent man would suggest you have to prepare for continued dollar strength. And, if that means, that the real is going to continue, dollar real is going to continue rising through 6, I think that very well may be the case. I think you have to really look at the Asian funders. You have to look at those low-yielding Asian currencies like the China yuan, like the Taiwan dollar, like the Korean won. That's really going to tell you everything you need to know about the global growth picture, which we expect to decline in the year ahead, Tom. And we also expect inflation decline. So we're looking for this kind of, I don't want to call it a soft landing scenario, but one that should be good for fixed income writ large, and one that hopefully, if financial conditions do remain loose here in the U.S., is going to be good for beta chasers and equity players as well.
What do you emerging market types think about China in 2025? What do we do here?
Again, it's waiting for Godot. We're waiting for the stimulus to really resonate, not with the the manufacturing sector, but with households. And I think that's the real risk. And we've been talking about this since forever. And barring helicopter stimulus and actually injecting real dollars into the wallets of those on the ground, it's just going to be very, very difficult to correct sentiment and to get the housing market straight. And they're taking some real steps here, but we just haven't seen that fiscal stimulus show up in the numbers yet.
What's the difference now between 98 and that EM said we're never going to be beholden to dollar again? In their debt, their currency, local currency debt, and their dollar denominated debt, are they vulnerable here to the events that Damien Sassower sees?
Fundamentally, they're far less vulnerable. And I think what's really changed is structurally the global capital markets are so much more efficient and so much more, there's just so much more margin for, I don't want to say error, but for these countries to fund their balance sheets, their balance of payments in multiple different currencies across multiple different parts of the capital structure. And it just opens the door for them to really manage the storm that much more efficiently, and they have a lot more experience than they did in 1998, Tom. A lot of these countries are far more developed than they were then. We talk about what is an emerging market today. Do you really believe South Korea or China are emerging markets? Good luck. So, I think what you have to really just kind of take stock in is that, calling for the end of emerging markets, for the death of EM debt, it's just getting a little bit long in the tooth, and I like to fade that. I continue to think EM credit's the best place to do it.
Where are the best values that you see out there in emerging markets for 25? What's your forecast note telling everybody?
I'm a baby. I still believe in playing against pay in kind, and I like interest to accrue into my wallet. So for me, I like investment grade EM. I know it's boring. I know everybody talks about places like Saudi Arabia and Indonesia and what have you, and they just kind of get fed up with it because it's only yielding 5 to 6%. But I like 5 to 6% yields in this environment, Paul, and that's just me being the prudent man.
So Damien Sassower, NFL pick. You're actually into this course with Bloomberg Business and Sports. To me, the Bills have by far and away the lightest schedule.
Yep. Yeah, no, absolutely. I'm a Bills. I'm a Josh Allen fan because I'm about to win the semifinals and I'm about to win in advance of the semifinals in our work league here, and I'm doing it on the back of Josh Allen and the Buffalo Bills. They look great, and sorry, Michael Barr, but your Detroit Lions look awesome also, and but yeah, I think the AFC is still going to be it's going to go through the AFC, be it the Chiefs or the Bills. It looks like those are the two teams that, and maybe even the Ravens. I mean, the Ravens look great also.
They look good. I don't really watch much, but I did look at the Bills.
I mean, the Jets can't even lose right, Ken. Oh, what is going on in your head? Look at you. Oh my God, Orchard Park believers, there is a Buffalo Bills hat on Tom Keene's head right now, and it's that old Buffalo Bills logo that I love.
I am so old. I saw OJ's first preseason in Buffalo. way up. I could wave to Toronto. I was so high in the stadium, and I have a memory of, he was completely separate and original on the field.
Buffalo's a fun team to root for right now, I got to tell you.
They're
Josh
fun.
Allen, they are putting up tons of points. So is Detroit.
Where's the defense? What are they going to do, when they play the Bears in the Super Bowl?
The Jets.
Yeah.
Damian Sassar on short notice. Thank you so much. Stay with us. Good morning, Buffalo.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got green on the screen. Investors looking ahead to the last Federal Reserve meeting of the year. Surrounding it, we have some more economic data. This morning, it's PMI data at 9:45 Wall Street time. Tomorrow, November retail sales, and also read on industrial production. And of course, Friday, the focus turns to core PCE. More earnings this week as well. Micron Technology on Wednesday, followed by FedEx and Nike on Thursday. NASDAQ futures up 0.5%, 117 points. Dow futures up 0.1%, 81 points. S&P futures rising 0.3% or 19 points. The two-year yield 4.22%. That's down 2 basis points. The yield on the 10-year 4.36%, and that's down 3 basis points. The Bloomberg Dollar Spot Index is little changed, and we have Bitcoin above 104,000. Few companies making news. We have the Wall Street Journal reporting WHP Global nearing a deal to purchase the wedding dress brand Vera Wang. It's expected to be announced today. And shares of Capri Holding up 4.5%. Women's Wear Daily reporting that the fashion company working with a bank to find buyers for its Versace and also Jimmy Choo brands. And finally, since we've been playing holiday music here in Surveillance, I figured I'd go with this story. The Wall Street Journal reporting the holiday company party changing. Your +1 is not invited anymore. Cost saver, and also because they want to focus on getting to know their remote workers better because they're finally coming back to the office for that party. That is your Bloomberg Business Flash, Paul and Tom.
Don't get me going. Nick Bloom was in Barron's this week, and I read every single word. He's the one at Stanford, folks, who's researched this up, down, and sideways. And Lisa, he said exactly what you said. Everybody's at home, but boy, they'll come in for the office party. We got to get Nick Bloom on here as we can. Through the year. This is Joy right now. You look at equities, bonds, currencies, commodities, and from the advent of the program, we've been remiss. We really haven't taken advantage of tax-free bonds. What's great is Pat Haskell at BlackRock, and what's so wonderful about this, as I mentioned last week, it's different if you've been a trader, if you've enjoyed watching the bid walk away, which Pat Haskell has in a storied career at HSBC, at Credit Suisse, and now holding court in Munis. At BlackRock. What's the value proposition this morning in taking advantage of tax-free bonds?
Look, I think there's, one of the great traders I started working with early in my career said, don't fight the Fed, buy dips. Well, the Fed started easing. It's time to buy dips in the bond market. And I think that when we look at the after-tax yields in Munis in the investment grade sector at 5.80 and behind 8.5 in the high yield sector,
right,
that's incredibly compelling, and it's a better credit quality than the taxable market.
Can our listeners and viewers buy individual paper like in the old days, the romance of picking up that New Jersey piece or whatever, or do you just simply have to go through an institution like BlackRock?
No, you can do both. You can do both. I mean, and it depends. Like, you talk to financial advisors a lot. There's certain teams that are very good at picking CUSIPs, but most of them, as they change their practices and they go to scale their practices, use managed products in some way. If they just want to get asset exposure, they can buy an indexed ETF. If they want your go to sleep at night money, that's in an SMA. And actives outperformed this past year and the year before, and I think 2025 it'll be the same. And you can do that through funds or active ETFs.
Paul, I'd suggest this is little known, that in fixed income, active is done far better on a relative basis than in the equity market.
Yeah, absolutely. My guy at First Boston back in the day got me in to Munis in 2000. Issuance, how's it been in 2024, the new issuance, and kind of what are the expectations for next year?
Busy. It's been a busy year. Initially, it was anticipated the first half of the year was going to have heavy issuance, and that was a pull forward in front of the election.
Yep.
In fact, the bankers have been very busy. The infrastructure needs in our country are significant.
Yep.
We expect that to continue in 2025 with north of $500 billion in issuance.
And talk to us about credit. I haven't heard any real credit issues out there in our marketplace. I don't have somebody saying that half of the municipal bonds in this country are going broke like some person did years back.
A few years ago.
Yeah.
Actually, credit quality is excellent.
Okay.
As you look at the broader market, essentially, state and local governments came out of the middle of the pandemic short of about $140 billion, and the Feds gave them $300. And so now some of that sugar rush has come off, and we're looking at cracks and trying to make sure where we do see cracks in the system. We've got a couple of different AI models that actually can break down economic activity by zip code and county, because we're trying to look around the corner because credit quality is so good. I think probably the one concern I have is there's 3 or 4 states that still have significantly underfunded pensions, and long term that's going to be an issue if those aren't dealt with.
Have we cleaned up the shock and awe of Jefferson County, Alabama, or the Washington Public Power Supply System? Whoops.
Yeah, I was going to say.
I mean, are we beyond that? You guys are so smart now. We're beyond that.
I think we're all dating ourselves with whoops. But the look, Jefferson County was fraud, right? So the fraud can happen. You know, bad people are going to do bad things. People serve jail time on that. So I think the market is in a better place from a documentation standpoint, from a structuring standpoint. Could something like that happen? I suppose.
So what's a minimum number of bonds you want to have in an individual bond fund, a personal account? Can you get away with 7 bonds or 10 bonds, or do you got to go way out more than that?
Well, look, we like to pride ourselves on diversifying and be good risk managers.
Yeah, but you're BlackRock. You own the world.
So I'd say my answer would be north of 20, depending upon what sectors you're investing.
Okay.
Yeah.
You know?
So I understand the municipal bond market triple tax-free. That's what I understood.
Nailed that.
And then they come in, Tom, with taxable municipals. What is that?
Well, to get a tax-exempt status, you have to be very rigid in terms of what those funds are being used for. So an issuer, if they issue taxable bonds, has a lot more flexibility. And if we look at it versus its like-rated investment-grade corporates, it's higher quality credit. So if I said to you, do you want to buy the state of California or do you want to buy XYZ in the Dow, you're probably going to want to buy the state of California. So they have pretty good access to that market. I would say that taxable issuance has been light for the last couple of years, though.
And who buys the taxable stuff? Is it foreign buyers who aren't thinking so much about the tax advantages?
Foreign buyers, long-dated insurance companies that want that high-quality duration risk.
All right, so give me like a fun credit coming down the pipe here, because every once in a while I'll see Bloomberg News will write about, I don't know, a college is going to be issuing debt or a ski resort is going to be issuing debt. I mean, it seems like anybody can go to the municipal bond market these days. I mean, Deer Valley's issuing $300 million of debt.
And a well oversubscribed issue.
Oh, so you guys put your bids in?
Spielberg bought the whole issuance. Right?
Yes, exactly.
Look, there's a lot of cool credits, but we like the flagship universities. Some of the smaller universities, especially some of the smaller liberal arts types in New England and New York, are having problems.
You're killing me. You know where I'm going with this.
What's that?
I mean, come on. If BlackRock, Rick Reeder walks in, doesn't know what to do with the spare cash, and you going, Rick, Union College, you need their muni. Come on.
We love Union College.
Oh, we do we?
At least I do. I'm not sure. Might have to check in with the credit analyst on that one, but we do love Union College. Loyal alum.
What about, but to Union, which is hugely ranked, folks, up in Schenectady, New York, they've done, is the best valued liberal arts college. My uncle was a professor there at one point, and they play some hockey, to say the least. Maybe not this year, but they're quite good. Union College and the other Union College. Why should I buy that versus the Delta Terminal at LaGuardia?
Well, first of all, the Delta Terminal at LaGuardia is, I mean, it's a completely different credit. But I think you buy Union because over the Delta Terminal at LaGuardia because, the performance over time is proven. Where the Delta Terminal at LaGuardia is new. You've got to work out the kinks there, make sure there's no construction flaws, things along those lines. Which is also why it commanded more yield than Union College would.
But can our listeners and viewers get that paper because hitters like you at Union are elbowing them out for that offering? The feeling out there is I can't get that paper.
Most underwriters, most of the large underwriters will have a retail order period.
Yeah.
It's still very much a thing, especially when you get New York City, New York State, state of Massachusetts, they all have a retail order period.
Did your world change the day after the election? Does a Trump administration and Republicans in Congress and in the House and the Senate, did that change the municipal bond market, or just maybe how people might think about investing in that market?
There's people that I think are concerned that in any new administration that the exemption could be called into question. I think that's highly unlikely, but that was something that was thrown on the table when the president-elect came into office in 2016. I think that anything that this administration tries to get done, they're going to try to get done in the first 18 months. And I don't think that anything that's super controversial that would take out any of their key initiatives, I think doesn't go. So I don't think that happens. Sorry.
We've got time for one more guest. John Tucker's chafing at the bit. He wants to talk to you after about New Jersey Forple tax-free bonds. What's the biggest mistake retail makes in buying muni bonds?
Is not looking at the curve appropriately. So
going too far out, being a yield hog.
Actually staying too far in. And if you looked at the belly of the curve last year at different points, it was trading through the tax benefit. So you were much better off buying barbelling and buying something very short and very long. So be careful where the herd is going. When all the money's going in the ETFs and SMAs, make sure that you're buying the appropriate part of the yield curve.
Like, give me a duration there. You barbell it?
Yeah, I would still say you'd stay 6.5 to 7 in terms of duration, but it would be in a barbell format, not a bullet format.
Please don't be a stranger. This has been great.
Thanks for having me.
Huge response. We have Muni people on.
Bloomberg Intelligence, we have sponsored Muni segment every Friday.
We do.
We do. Sponsored.
My word.
Build
You demanded
America
that.
Mutual. Bam.
Do you know, Marty Braun had this, the Delta Airlines was an 11.6% yield equivalent for somebody making some serious money in New York City.
I'm sure these guys.
I mean, that's people don't know that math anymore.
I know.
Pat Haskell, thank you so much of BlackRock this morning. Futures up 19 with our news in New York City. John Tucker.
All right, the alleged killer of the United Healthcare CEO Brian Thompson may be back in New York soon. More on this report from Bloomberg's Courtney Donahoe.
Prosecutors are preparing for Luigi Mangione to arrive back in New York as early as this week after charging him in the murder of United Healthcare chief Brian Thompson. Mangione may waive extradition from Pennsylvania, where he was caught. A grand jury in New York could also hand down an indictment at any moment, speeding up the extradition process. Meantime, a new attorney will be defending Mangione. Karen Friedman Agnifilo, a former New York City prosecutor, is taking the case. In New York, I'm Courtney Donahoe, Bloomberg Radio.
And more drone sightings across the Northeast being reported. New Jersey Governor Phil Murphy, New York Governor Kathy Hochul among state leaders demanding expanded authority to act against drones that appear as a threat. The Homeland Security Secretary Alejandro Mayorkas tells ABC's This Week Americans will likely see more drones, but there's no evidence of foreign involvement or some sort of national security risk.
I want to assure the American public that we are on it. We are working in close coordination with state and local authorities. And it is critical, as we all have said for a number of years, that we need from Congress additional authorities to address the drone situation.
Homeland Security Secretary Alejandro Mayorkas also speculating the sightings may have increased due to the FAA's decision last year to allow nighttime drone flights. Health officials in the Gaza Strip say the death toll from the 14-month war between Israel and Hamas militants has topped 45,000 people. The Gaza Health Ministry does not distinguish between civilians and combatants in its count, but it has said that more than half of the fatalities are women and children. The Israeli military says it's killed more than 17,000 militants. And the lawyer helping Robert F. Kennedy Jr. pick federal health officials for the incoming Trump administration has petitioned the government to revoke its approval of the polio vaccine. According to the New York Times, Aaron Siri has also filed a petition seeking to pause the distribution of 13 other vaccines. Global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Tom, Paul, Lisa.
John Tucker, thanks so much. Spanning the globe today from Putney, Vermont to Union, New York, up the Mohawk River Valley. Really interesting about the localities of municipal paper. Paul, Marty brought on the Delta deal 15 months ago. Investor orders totaled 7 to 9 times the amount of securities available.
Yep.
That's what I'm talking
Yeah, I
about.
know.
What I hear constantly from people is they can't get paper. How do you get paper?
And now, I mean, Pat Haskell's talking about some of these really attractive yields out there. And if you're in a high-tax state like, I don't know, New Jersey, it makes after-tax yields are really attractive, man.
But how do you get the inventory? I don't understand how you get inventory.
You got to, well, I buy through a broker-dealer. And so if there's municipal, and there's always retail allocation, as Pat Haskell was saying. There always is. 20-30% of every new issue, mostly,
Huge response.
will go to retail.
Pat Haskell, thank you so much of BlackRock. We'll do more of that, taking advantage of tax-free bonds. We're on YouTube. It's our new distribution. Subscribe to Bloomberg Podcast, the most important way you can help Lisa Mateo.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures advancing in this final full week of trading for 2024. Right now, we have the NASDAQ futures up about 0.5%, 122 points. Dow futures up 0.1%, 76 points. S&P futures up 0.3%, or 20 points. The two-year yield, 4.22%. That's down 2 basis points. The yield on the 10-year, 4.36%, and that's down 3 basis points. To commodities, we have oil slipping, gold on the rise. The Bloomberg Dollar Spot Index is little changed. Few companies making news. SoftBank, sources say its CEO, Masayoshi Son, will announce today a plan to invest $100 billion in the U.S. over the next 4 years. The Skydance deal, sparking more studio protests over its merger with Paramount. Fuse Media tells a federal regulator, Paramount chair Shari Redstone, well, she will be overpaid in the deal and could harm the media business. And finally, sticking with entertainment, what's old is new again. The early 2000s TV show Malcolm in the Middle getting a 4-episode revival on Disney+. It follows Malcolm. He helps his parents celebrate their 40th wedding anniversary. That is your Bloomberg Business Flash. Tom and Paul.
The font of entertainment wisdom there from the woman who saw Craven the Hunter this weekend.
One of the few.
One of the few. Bloomberg surveillance this morning, brought to you by IBKR with Interactive Brokers Forecast Trader. You can trade your views on key economic and climate indicators. Visit ibkr.com/forecast and get started today. Jay emails in because we were taking advantage of tax-free bonds, and Jay says, Tom, I have available for you the 4% coupon, 22-year maturity, Swellesley, Massachusetts Township piece.
Oh,
like he's got
good tax base there.
Good tax base. It's to like refurbish the duck pond or something. But thank you, Jay, for that news you can use from Wellesley, Massachusetts. We say good morning, 92.9 FM in Boston. Thank you so much for listening from Katahdin down to Block Island. This is a joy. And for me and Paul and Lisa and Charlie Pellet, this could literally be a 3-hour conversation. We all fly, our loved ones fly. Stephen Trent is definitive at Citigroup on this. It's not American Airlines research. It's all of American research. Thrilled to have you in the studio. Way too short a visit. Let's just get the single best buy. Is it a foreign carrier or a domestic carrier?
Well, thank you so much for having me on, and good morning to you. So in terms of the carriers we like the most in the United States, it's going to be Delta Airlines is our top pick. We do have American Airlines with a buy rating in our focus group. On a long-term basis, however, within the Americas, Panama's Copa Airlines we think is dynamite.
Copa Airlines out of Panama. What's the play? I know you have a lot of experience covering the transports down in Latin America. Give us just kind of the macro call, because we don't talk about it a lot. How do we think about it from a 30,000-foot level, Latin America transportation?
Yeah, absolutely. So when we look at, for example, the market there versus the market here, I think there are a couple of things I would keep in mind. One of the most important things is the lack of capacity on a per capita basis. So you have, relative to the United States, lower employments per capita. The other thing I would layer on top of that, Latin America airlines, for the most part, of course, generate revenue in local currency and faced U.S. dollar indexed seat mile cost. So they are not long dollar companies. They actually suffer under those circumstances. The third thing I would highlight would be the lack of affordability to fly in Latin America. If you compare the average fare to average weekly per capita income versus U.S. So people that are flying, it's less elasticity.
Are they like us in that they have mileage programs and all the other accoutrements of U.S. airlines, or are they like something back 20 or 30 years where they're just trying to get to the end of the quarter?
Yeah, they're actually somewhat like the U.S. ones, and they are more unbundled than what we have here in the United States. So a full-blown Delta Airlines, for example, is sort of would be sort of an anomaly in many Latin markets.
How are Delta and United and the others competing with government-funded international air carriers like Air France, Qatar, Etihad, and the others buying Formula One billboards?
Yeah, that's kind of a tough place, and that has been sort of controversial at points in the past. So you would be concerned about those issues on the transatlantic, for example. But here in the United States, the model is very good. The airlines here have de-risked their earnings stream through co-branded card, loyalty programs, and the U.S. consumer itself. The demand we see for premium cabin is very good. So we've seen big improvements in earnings quality.
How about some of the budget airlines here? That's a tough business in this country. I'm thinking Spirit and Frontier and all these things. What's going on? How do you run a budget airline these days?
You know, it's tough. I think it's very difficult. And what do you see with the budget airlines today? They're all trying to add premium. And so when we look at this movement to adjust the front of the cabin, are they going to improve unit revenues on that? Yes, they probably will. But if you're a network airline, you're already a unit revenue champion with a strong demand curve. If you're a budget airline, historically, you've never been good at unit revenue. You want to dilate the heck out of your seat mile cost. And you can't do that so well.
But Stephen, Trent, help me here. Like Robert Crandall was a huge supporter of what I was doing, and it was such a joy to have him and Mrs. Crandall up from Florida. He changed what we do, but is it still cyclical? I'm looking at the 10-year track record of Delta Airlines. They've had some challenges like a pandemic. And I'm sorry, it's not good enough total return. Is there a new persistency to cash flow where they're acting like a blue chip stock, or is it another up and down airline cardiac arrest with these stocks?
Yeah, look, so I think relative to 2009 to now, for example, there's a lot that's changed. So the U.S. airlines, for example, do very little synthetic fuel hedging, which I would argue is part of the problem. More importantly, however, the co-branded card piece of the pie is really important. So they're getting cash flow streams from consumers using their credit cards.
Is that more important than Paul sitting on the runway at Newark?
Okay, well, that's a challenge too. Newark has had his issues.
Yep.
But
Terminal A is good though. Boy, they did a good job there.
It sure is.
So what? All right. So is the business flyer? I know the leisure flyer is back and above pre-pandemic levels. How about the business flyer? What's the new normal? What are the airlines telling you is the new normal for business travel?
Yeah. So I think we're like going back to where we were in terms of those distribution channels kind of getting filled out again. But pre-pandemic business travel, are we going all the way back? I would say no. And that's because in a lot of industries, you no longer have the consumer in the office 5 days a week. So I'm not saying that the fly out Sunday night, fly home Thursday night is gone, but I think it's at least somewhat diminished. And you've seen some of that flow going towards blended travel.
Yeah.
People traveling in, these pre-pandemic shoulder periods.
Single best buy is Delta, right?
Yes, for the
Just
U.S.
very quickly, or how are their lounges doing? Because I can't get into them.
Well, I think those full lounges are a darn good sign of demand. So that's going very well. And the other equipment and infrastructure they have set up for premium is great. I think American Airlines is just getting started with co-branded card. So those are the network carriers. I think
you
those
haven't
are the
mentioned
ones.
United. I got 30 seconds. What's Kirby doing at United?
I'm a fan of United as well. I think they're doing great. We had them on our focus list. That was some very good performance on the back of it. So we continue to think free cash flow for these network airlines is still spooling up, and the diversity of the free cash flow is no longer coming from just passengers buying tickets. It's coming from co-branded card.
Up 130% this year. Steve whispered in my ear.
Yeah.
did you hear how he said spooling cash flow?
I know
You have to go to
that means.
Tuck to say that.
Yeah,
You can only do that if you go to Tuck up at Dartmouth.
The most loyal
Stephen
alumni
Trent,
base
don't be a
ever.
stranger. Thank you so much. Rebecca Patterson came in and said she's never showing up in 2025 if we don't play holiday music today. She had the whole red Christmas seasonal
fantastic, right?
outfit going. Bing and the Andrews sisters.
Jingle bells, jingle all the way. Oh, what fun it is to ride in a one-horse open sleigh.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What do you say to people scared stiff in cash?
We've got an administration, presumably, that will be pro-business, lower taxes.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, recovering from the Lions' loss. 90 points in one game.
Wow.
Why
That was
couldn't they
fun.
top 100?
Yeah,
it was fun.
Fun to watch, no question.
It was fun to watch, and I'm not as sophisticated. I thought there were lots of calls that weren't made. Like there was like pass interference. I'm like, why don't they
That's
call
fine.
that?
I don't mind it.
They don't stop the play and like check it or something.
No, but I mean, for those of us in New York City, we never see that kind of football.
Yeah,
so
I watched
it was
4
fun to
minutes
watch.
of the Giants. That was they had the John Tucker they had the plane going around MetLife Stadium.
Yep.
Saying fire them
Please,
all.
help.
Lisa's thinking of putting that around the team surveillance stadium here. We welcome all of you across the country on your commute, Apple CarPlay, Android Auto, and on YouTube. I can't say enough about this new distribution for us. YouTube, go to Bloomberg Podcasts on YouTube. You could subscribe there. That's a key way to help me keep this thing going. It's a new experiment. I mean, it's like a whole new world after all with YouTube. Please sign up. Max Kettner's family's on YouTube right now in the United Kingdom. He'll be with us in a moment. Kettner's nailed the equity market. We'll talk to him about the path forward. Bloomberg Surveillance this morning. We're brought to you by Paul mentioned it. BAM Mutual. They insure municipal bonds that finance essential infrastructure and provide guaranteed income to improve any portfolio. Learn more about municipal bond credit quality. Visit bambonds.com. BAMBONDS, bambonds.com. Paul, what does BAM do? I mean, you mentioned it earlier.
Build America Mutual. They insure municipal bonds. So
it's been successful, to say the least.
It's great. And a lot of issuers need that insurance to make it attractive for investors. And it's part of that market.
Thank you, BAM Municipal, for that. From the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mateo.
And we've got futures pointing to a higher open. This is ahead of more economic data out this week. We already learned that the Federal Reserve Bank of New York's December manufacturing index, that fell 31 points, the most since May of 2023. About 45 minutes from now, we'll get PMI. Tomorrow, retail sales and core PCE on a Friday. NASDAQ futures up 0.5%, 121 points. Dow futures 0.2%, 103 points. And S&P futures up 0.3%, 22 points. The 2-year yield at 4.22%, down 2 basis points. The yield on the 10-year, 4.37%, and that's down 3 basis points. The Bloomberg Dollar Spot Index is little change. Bitcoin hit a fresh record. It's now at just over 103,000. It's thanks in part to optimism about MicroStrategy's inclusion in the NASDAQ 100. The company also bought an additional $1.5 billion of the cryptocurrency through the sale of stock. We have shares of MicroStrategy up about 4%. Meanwhile, Super Microcomputer, that will drop out of the NASDAQ 100. Its shares are down about 12%. Crypto-linked stocks like Coinbase up nearly 2%, Mara Holdings up 3%, and online brokerage Robinhood up 2%. That is your Bloomberg Business Flash. Paul and Tom.
Thanks so much, Lisa. Greatly appreciate it. I can't say enough about the heritage of strategy at the Hong Kong and Shanghai Banking Corporation. They got to get a major. They said to Steve Major, "You're in London, it's tight to cash. Move to Hong Kong." Wow. And no one I know, Paul, put up with where you have to stay in your hotel room for weeks.
Right. Yeah.
Mental block. Yep. Steve Major did that like nobody to move their shop over to HSBC, holding court in London with the equity heritage and the multi-asset heritage of HSBC is Max Kettner. He has nailed. You got to be in the market. You got to participate. Max, congratulations. If you forward, you remain unchanged. But at the same time, you're saying where we could be wrong next year. Where could you be wrong, oh wise one?
Yeah, thanks for having me, Tom. Look, I think one of the things where we could be wrong is, and that probably sounds a little arrogant if I say that now, is perhaps where our view might be turning out almost too correct. As in growth rebounding too strongly in the US, really sort of growth going gangbusters. And that, of course, would call into question really any sort of further easing of the Fed. It would call into question what we still believe is a pretty benign Goldilocks backdrop going into the first half of next year. So that, of course, I think is still really by far the biggest risk is on the rate side. It's on the yield side. We've seen a tiny bit of a whiff of that straight after the US elections. It's what we call the danger zone. So the zone where really yields start rising to, where it starts putting pressure across all the asset classes. We've last seen that in April. We've seen that last year from August, September, October as well, when the 10-year hit 5%. That to us is still really the biggest danger because from an asset allocation perspective, it's so incredibly difficult to find any kind of spot where to hide. It comes from rates and it spreads throughout all the asset classes.
Max, when you talk to your clients around the world, are they joining in on kind of what we've heard a little bit more frequently over the last couple of months of folks coming into the U.S. risk market stocks, bond markets, and we're just seeing a flood of international money? Is that kind of what you're seeing from your end?
Yeah, I think we are seeing that. I think it's quite consensus to be long the US. It's quite consensus to be overweight US equities. We're no different from that. So we really sit pretty comfortably with consensus there. I would say, however, that it's also got quite consensus to that, overall consensus is bullish. Whereas, when we look at some of the surveys since the election have actually gone down. When we look at the price election, it's also the same thing, right? We've seen value stocks down. We've seen the equal weighted S&P down. We've seen the Russell down. We've seen sort of the yield curve steepeners being unwound as well. So I wouldn't really subscribe to, well, this is sort of the period where it's between election and the inauguration. So it's the honeymoon period. I wouldn't really subscribe to that because really what we're seeing now is actually a return of the Magnificent Seven, particularly the last week and a half, last 2 weeks, which is largely really an earnings story. It's a story about improving guidance on the tech side of things and really doesn't have an awful lot to do with the day-to-day politics.
Max Kettner, fold in the heritage. When I'm in the Bloomberg building, folks, you cross the train tracks in Hong Kong to go. It's a stereotype from another time and place to go to the HSBC complex. Like I think of Caroline Maurer and others on your Hong Kong team. There's a great gloom about China. Is HSBC pushing against that and saying that China could actually assist in growth optimism?
Yeah, I do think so. So from us, and particularly from a global perspective, if you run a global asset allocation, we've continued to stress that actually China is an almost universally asymmetrically positive risk. Why? Because let's face it, before we had these stimulus measures, so before really all this stimulus kicked off in China about two and a half months ago, global investment grade spreads, whether that was in the US, whether that was in euros, actually whether that was even an emerging market credit spreads, all of those were tightening relentlessly, particularly since the Jackson Hole conference in August. We've seen the S&P go from one all-time high to the other. So China didn't really play that much of a role, whereas obviously if China really does stimulate further, if we start to see some of the higher frequency measures really ticking higher, if we were to see things like retail sales, really things like domestic consumptions really start to pick up in 2025, that of course would just add another factor to that really, really long list of positive catalysts.
Right.
If it doesn't come, I don't think it's going to be this big negative catalyst, because let's remember, that was the same thing in the last 2 years, and it didn't deter markets from buying.
We got the headlines coming out. We expect them in the next hour or two on Germany and a no confidence vote. Max Kettner, can you have confidence in Germany here at the bottom? Can you go long VW?
I don't think quite yet, but I think Europe, we shouldn't throw in completely the towel on that, particularly on the equity and the credit space. Let's remember, when you look at Euro high yield nowadays is only 6% triple Cs. We've had 2 default waves already in the last 4 years. So people trying to play politics, for example, in Euro credit, that doesn't work. You look at Euros and equities. Look at German equities. You were just saying VW. Well, German equities are up more than 20%. Yeah, sure enough, they've been trading the S&P. But more than 20% up in a year where everyone's been banging on about how deeply structural the problems are in Germany, that's not really a year where you'd be like, oh my God, everything is in the doldrums. Absolutely not. So we've got to remember that when we buy German equities, you're not buying the politics, you're not just buying the China baskets. What you're buying right now is the SAPs, the Infineons, the Rheinmetall, Siemens Energy. So you're buying a bit of defense, you're buying the AI story, you're buying into tech. That's really what's driving German small caps right now. Doesn't really have a lot to do with the German elections, I think.
Max, when you do a confab in New York, we got to get you and Stephen Major into the studio for an entire half hour. Kettner and Major.
Yeah, that'll work.
We don't, but Max, we won't talk West Ham football. I promise you. Max Kettner, HSBC. There, he's been dead on about participate and participates into 2025. We participate in a NASDAQ up 0.5%. With our news in New York City, here's John Tucker.
All right, guys. SoftBank Group CEO and legendary deep-pocketed investor Masayoshi Son is announcing a plan to invest $100 billion in the U.S. over the next 4 years. Our sources say it's coming during a visit with President-elect Donald Trump today. Son will pledge to create 100,000 jobs focused on artificial intelligence and related infrastructure. The Japanese billionaire joins a number of technology executives angling to win favor from the incoming administration. The latest on the recent drone sightings, after dozens of unidentified drones have been flying throughout the Northeast in recent weeks, Senator Chuck Schumer of New York calling on the Department of Homeland Security to deploy drone detection technology.
If the technology exists for a drone to make it up into the sky, there certainly is the technology that can track the craft with precision and determine what the heck is going on.
Senator Schumer also says he's working to pass a bill in the Senate that would give local law enforcement more tools for detecting drones. And this is happening right now. Germany's Chancellor Olaf Scholz will submit to Parliament a vote of confidence today, which he intends to lose, and this will trigger an early election. The ruling coalition was dismantled last month after he fired the finance minister. That left him without a parliamentary majority enforcing the early vote. Well, Bloomberg's Oliver Crook has details.
So what will happen is at 1 p.m. here in Berlin at the Bundestag, Chancellor Scholz will speak before the Bundestag. He will give a 25-minute speech. That will be followed by 2 hours of debate, then a roll call vote. Then we get the result by about 4 p.m., which he is widely anticipated to lose, which he is intending, in fact, to lose, in order to set up basically the election on February 23rd.
The political collapse comes as the country's economy is now 5% smaller than it would have been if the pre-pandemic growth trend had been maintained. And France's new Prime Minister François Bayrou's meeting with Marine Le Pen this morning left the far-right leader more positive on his methods. Even if she said it wasn't clear yet if the talks were useful, Le Pen's discussion was just the first of several the new prime minister holding today with different political groups in the parliament there. And local officials in the French territory Mayotte fear as many as 1,000 people are dead after tropical cyclone Chido hit the island off the coast of Mozambique. The cyclone hit Mayotte with winds of more than 124 miles an hour. The problem there with this territory, a lot of the huts they have are roofed with metal tin roofs. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Tom
John
Paul
Tucker,
Lisa.
thanks so much. Just quickly here, Paul, Warner Brothers Discovery. I read a couple articles this weekend. I just flat out don't get it.
You're not into Shark Week? That's not
I don't know.
Yeah. So if you're Paramount, Tom, if you're Warner Brothers Discovery, are you big enough to play against the big tech companies? And that's the question, really simply. People feel like Disney is in fact big enough, but maybe some of these other sub-scale media companies are not.
Oh, yeah.
And you got to throw Warner Brothers Discovery, I guess, into that group. So we'll see how it
We'll get
plays
Rich
out.
Greenfield, Michael Nathanson, Craig Moffitt in here. We'll talk it up here as we can.
Smart folks.
Into the year. Futures up 18, the VIX 14.21. It's Bloomberg's surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this futures report sponsored by IBKR. Markets never sleep, and neither does Interactive Brokers. Discover opportunities with CME Group futures across equity indices, interest rates, FX, energy, and more. Access CME futures around the clock at Interactive Brokers. All right, we've got futures on the rise. This is we await this week's interest rate decision from the Federal Reserve. Goldman Sachs economists, they say they expect a 25 basis point reduction from the Fed this week. That's followed by a pause in January. NASDAQ futures up 0.4%, 104 points. Dow futures up 0.1%, 66 points. S&P futures rising 0.3%, or 18 points. The two-year yield 4.22%. That's down 2 basis points. The yield on the 10-year 4.37%. That's down 2 basis points. To commodities, we have oil slipping. Gold is on the rise, and the Bloomberg Dollar Spot Index is little changed. Few stocks on the move. Drone tech company Red Cat up 15%. It announced a strategic partnership with Palantir Technologies. Then you have shares of Honeywell. They're up more than 2% after saying it's considering strategic options, including the possible separation of its aerospace business. And finally, shares of Ford down 3% after Jefferies turns bearish on the automaker. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Fed meeting on Wednesday. We really sort of ignored it today, looking at markets, which I think are absolutely fascinating. I walked in this morning, and you've certainly got a correlated lift to the market. I go to the 10-year real yield out, 2.03%. To get to a 204, 205 on that would be something. Joining us from TCW, Trust Company of the West, Jamie Patton joins us, head of global rates. I really can't say enough about her work, her pedigree, coming out of computer science, Princeton, and working at Lehman and Barclays and on to Wells Fargo as well. Jamie, I love your note, and you finished strong with it is about the Fed, and you say this is a Fed that will be forced to keep rates higher for longer. Why will they stay higher for longer?
Well, first of all, I will say we do not envy the Fed's position. They have to base their decisions and actions on data that is fundamentally flawed and lagged
and late.
And they're late, almost definitionally. If they have to wait for inflation to get down to 2% and they have to wait to see the unemployment rate go higher, it's already too late. And we know from the hiking cycle how much longer lags are this cycle in this economy than they have been historically. So just like it took a long time for rates to impact the economy on the way up, it will take a much longer time for rates to impact the economy on the way down. So we think right now, the way we like to phrase it is that the market is telling a story of a Fed that has the luxury of very slowly, very mildly lowering rates because they can, because everything looks good in the economy, What we think is going to happen is that the Fed's going to wake up one day and be like, uh-oh, we have to lower rates. We have to. It's not a luxury. It's not because we can. It's because we see this weakening in the economy. And that's why our long duration position is focused on the front end of the curve, which is most sensitive to Fed policy.
So, Jamie, did you and your team, did you wake up the day after the election and say, all right, with some of these policies that President-elect Trump is talking about and with Republican Congress, we need to maybe change the way we're thinking about the rates market?
Great question. So after the election and the red sweep, we kind of re-underwrote all of our positioning. And it was an interesting conversation because the market reaction to us felt pretty lazy. It was like, Trump, red sweep, higher rates, higher growth, higher inflation, and then everyone went along with their lives. We think that in some ways, it's really helpful to have 2016 as a guide, and it's very informative. But in other ways, 2016 couldn't be more different than today. The state of affairs was all different. Debt to GDP was different. Deficit as a percent of GDP more than doubled. Where we are in the economic cycle is different. Valuations are totally different. The corporate sector is at historic tights. And we have more offsetting factors today, like a strong dollar will offset tariff impacts. High interest rates will offset corporate profitability. But there are some ways where we can look back at 2016 and say, okay, we have a lot of information that we didn't have before. We know exactly who Trump is. We know that campaign promises are much, much bigger than the actual policy bite. Look at Trump inviting Xi to his inauguration. I don't know about you guys, but when I have a party, I don't invite people that I'm planning to make my mortal enemy. Just maybe that's just me, right. But you can already kind of see signs of him coming off of those really harsh campaign promises. So when we look at our positioning, rates, in 2016, rates were higher following Trump's inauguration in the year after the election. It was led by the front end. But that move higher was a repricing in Fed policy and rate expectations. That doesn't apply to today. In 2016, we were on the eve of a hiking cycle. Today, we're in the middle of an easing cycle. If we had that same Fed policy repricing, the Fed would be done easing rates, and they might even turn around and hike again. That's really hard for us to imagine in the face of a weakening labor market with every other DM central bank in the middle of an easing cycle, ex-Japan, of course. It just doesn't, like, you can't take that and apply it to today. Similarly, in inflation, what's interesting is the markets in 2016, they repriced to imply that inflation would be higher, and it wasn't. It didn't pick up after Trump 1.0. So this time, we have inflation markets repricing higher and not looking back and learning from their prior mistakes, realizing that tariffs are actually just a price shock. They act more like a tax, and whether it's on the consumer or the supplier is more about the elasticity of the goods. But it's not an inflationary environment, and it's certainly not the demand-driven inflation that the Fed is going to be really worried about. And slower immigration, sure, it's inflationary in terms of less labor supply, higher wage inflation, but it's also less demand for goods and services, which is bad for growth. So to us, less immigration doesn't scream inflation either. So we look back at 2016, we thought we learned a lesson there, but the market's making the same mistake all over again. It reminds me of my kids actually listening to me when I say, if you're not a good listener, Santa's not going to bring you presents. Like, they weren't good listeners last year. They got presents last year, but they don't learn. So I continue threatening them.
Jamie, that doesn't work at 17.
Exactly. So, Jamie, given all that backdrop, what do you think we're going to hear from the Fed on Wednesday? And then kind of how should we think about the Fed in the early part of next year?
The Fed sounds nervous to me, and I would be if I were them too. It's like they're very uncomfortable with lowering rates because of where the economy is right now, but I don't think they should be. I think they should be very confident. The speakers that we've had from the Fed are all talking about how everything's kind of perfect right now. If we could just freeze it, maybe inflation could come down a little bit more. Maybe growth could strengthen, or maybe, the labor market could strengthen a little bit. It shows some signs of weakening, but they seem pretty happy with where things are, which doesn't make sense to me when rates are at 4.75. Rates are super restrictive. Even if their own long-term definition of neutral, which currently is 2.875, even if that went up 50 basis points, the market never gets back to neutral, let alone accommodative. And that's where we at TCW disagree with these markets, because we still believe this is a business cycle. Rates go restrictive, they come back to neutral, they get a little accommodative, they come back to neutral, and the market just isn't pricing that in, which is great risk reward for a long duration position in the front end.
Jamie, thank you so much. Jamie Patton with us, TCW on the left coast as well. She is a really extraordinary individual. Full disclosure, I've done all sorts of work with her for the years, particularly her tour duty at Reuters. Chrystia Freeland has resigned from the Canadian Justin Trudeau cabinet. Widely anticipated within their parliamentary system. Okay. She will run for office in Toronto. Of course, it's lit up Twitter in a struggling Canada. I mean, it's a huge deal. I'd read her letter of resignation, except "Se fait fournir de ma veille de Sevier." It's in French.
There we go.
They do that. They do English and French as well. But Chrystia Freeland, arguably the finance minister, certainly hugely involved in the deficit discussion within Canada, resigns from the Trudeau cabinet, and it is assumed she will run in Toronto for office within their parliamentary system.
I think what I've learned about the Canadian economy most recently is about the importance of the value of home ownership in an individual's overall net worth. It's much higher there than it is in the U.S. And they have much more interest rate sensitivity there on mortgage rates. Yep. So when rates go up like they have over the last several years, they feel it a little bit more acutely than we do here in the U.S.
I was thunderstruck when I was in Toronto a number of months ago for Bloomberg, the decline of the city. The tension up there is palpable. Okay. Good morning to all listening across Canada. Stay with us on YouTube. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene and Paul Sweeney with your opening bell report. So investors kind of looking ahead to the last Federal Reserve meeting of the year, as well as meetings of the Bank of Japan, Bank of England. We also have more economic data on tap out this week, including retail sales tomorrow, also all core PCE on Friday. But let's see how we kick things off. Final full week of trading in 2024. We'll start with the S&P 500, up 0.2%, 14 points, 6,066. The Dow, little changed, up 24 points, 43,851. The NASDAQ, up 0.4%, 89 points at 20,016. The 2-year yield, 4.23%. That's down 1 basis point. The yield on the 10-year, 4.37%, and that's down 2 basis points. Over to commodities, we have Brent crude down about 0.5% at $74 a barrel. WTI crude $70 a barrel. Spot gold higher at $2,657 an ounce. The Bloomberg Dollar Spot Index is up about 0.3% after 6 days of gains. Bitcoin hit a new record, topping 106,000 after its longest weekly winning run since 2021. It's now at just over 104,000. At the open, we'll check it with some crypto-related stocks. We'll start with Coinbase. That is up about 2%. Mara Holdings is up about 3%, and we have online brokerage Robinhood up more than 1%. That is your Bloomberg opening bell report. Paul and Tom.
Thanks so much, Lisa. Greatly appreciate that. Canada. There's 2 ways to quote this. There's the tourist dollar, which I think of Niagara Falls and, looking at the rainbows and, the whole thing from years ago. And then there's loonie, which is the Canadian dollars per U.S. dollar. and it's a 142.58, $1.42 Canadian, and that's up from a 135-ish. It is a weaker Canadian dollar, and to have that run through, if I run a long-term chart on that, it shows the angst there. Huge response out on YouTube on Canada going back to pandemic weakness. Not there yet at a 145, 142 there. Chrystia Freeland resigns from the Trudeau cabinet. Regina Mayer joins us now, global head, clients and markets on oil, petroleum with KPMG, teaching at Rice occasionally. We're thrilled that she could join this morning. I see, Regina, a disconnect. I see lots of people saying there's supply, but I don't really hear people modeling West Texas Intermediate breaking down decisively under 70. Is there a possibility we could see 65 or dare I say $59 American oil?
I do think that there's some downward pressure on U.S. energy prices with the impact of what the incoming administration is saying that they will do to incentivize production. We have seen, natural gas in some of those parts trading even in the negatives based on some of the supply issues that come up. So I don't think it's outside of the realm of possibility, Tom. I'm not as bullish, though, in terms of WTI's downward pressure to get all the way to 59. I think it stays in the mid-60s to perhaps the lower 70s. And I am starting to see more upward pressure when you start to look at some of the geopolitical tensions and the fact that the EIA even adjusted its overall U.S. supply forecast for 2025, going from a 300,000 barrel per day surplus to a 100,000 barrel per day negative. So again, you've got the upward and downward pressure, so I don't necessarily see it plummeting to 59.
Regina, I know when we think about global oil, global energy, we have to have a call on China, demand there. How do you think about demand in 2025?
I do think that's where the IEA, the global organization that looks at forecasts, that's why they remain very bullish that we will have an oversupply situation into 2025. So their projection is 1 million barrels per day surplus, and a lot of that is due to Chinese demand. We don't necessarily know what happens with the stimulus programs that I know that the government is considering there. But we're also looking at weakening global demand given some of the geopolitical tensions, fears in Europe about what the tariff situation might mean, dampening of demand overall outside of the U.S.
Regina, I'm a big fan of the TV show Landman, so I now consider myself an expert on the energy business.
We warned her in advance.
Exactly. So, and I know now that the U.S. has gone from being a net importer of oil to a net exporter. What does that mean for OPEC? And do we have to really focus as much as we historically have on OPEC?
Well, I do think we're in a great situation relative to U.S. energy supply and U.S. energy security. But the U.S. has really become the provider, a low-cost provider to many, many jurisdictions all around the world. And I think that is the opportunity for us. I do sometimes worry that the impact of some of the rhetoric around what we would do with energy policy would restrict those flows. I know that my U.S. oil and gas clients would really love the LNG pause to be lifted. We were the top LNG exporter globally in 2023, and we're on track to be in that same position in 2024. So I'd love to see more U.S. oil support across the world. And I agree, OPEC's relevance is becoming more marginalized when it comes to U.S. consumption.
Regina, if you were to sit with a president-elect or, inaugurated President Trump, and he's got an idea of the oil business, and you're world famous on this, and he's looking at landmen, and he's saying, Tommy Norris is my kind of guy in landmen. What is the biggest myth about the American petroleum business besides, James Dean out in the tundra near Abilene or wherever? What's the biggest thing President Trump and Tom Keene get wrong about American oil?
Well, I think the Wild Wild West characterization is where probably the biggest myth comes from. It's an incredibly sophisticated, highly innovative industry with tons of talent. So, this notion that you could find a title in some county courthouse that would suddenly yield a whole bunch of supply that would impact a whole bunch of reserves that would impact global supply in a needle moving way is definitely mythological. I love that you have a show like Landman that's showing the talent that we've had within our industry for many, many years. But yes, I would say that Wild Wild West characterization might be one of the biggest myths. I thought that went away during Dallas.
Yeah, exactly. It's making a comeback.
Paul, cut to the chase. Are we going to get season 2 of Landman?
I think we might. I'll make some calls out to Hollywood.
Paul's endorsement alone on this show. There you go.
Regina, I think a lot of observers of the energy business, the U.S. energy business, have been pretty astounded at how disciplined it seems like some of our U.S. companies are in terms of not drill, baby, drill, but kind of being a little bit more disciplined and returning cash to shareholders and things like that. Is that the new normal for the U.S. oil and gas business?
Absolutely. That's right. That's where I kind of go from this Wild Wild West characterization as well. They're very disciplined, highly sophisticated, Wall Street savvy runners of their own businesses. I think if you look at Big Oil's earnings and some of their capital announcements, you see some actually reducing capital allocations. You see some increasing in interesting ways, right? So I do think one of the things that I would say is having more leases in the Gulf of Mexico and removing some of the restrictions in terms of how much you can drill there. Right now, there's a limit of 3 areas that you can drill up until 2029. I know the industry would like to see some of those restrictions removed, and I do think that's where we could further exploit our resources.
Regina, one final question. I don't want you to do buy, hold, sell on ExxonMobil, but clearly their management has made a statement that says we're in the oil business. Are others going to join ExxonMobil in pushing aside a lot of modern petroleum hydrocarbon theories?
Well, I know you know that I can't comment on particular strategy, but I would say I think that all of them are considering a modified portfolio strategy. None of them have walked away from low carbon solutions. Some of them are going deeper on renewables. Some of them are going deeper on carbon capture. Some of them are continuing to look at direct air capture and hydrogen and other sources. I think that's terrific because we need those other sources as we go forward. We're looking at one of the major trends is tech and data electricity consumption, and that's not going to necessarily come purely from carbon-based methods. So I think it's still a portfolio strategy. I don't think it's where we're going to put all in on hydrocarbons and go back to a fossil fuel specific strategy. And I believe they're going to continue to hedge their bets and make the right investments in the future.
Regina, thank you so much. Never enough time. Regina Mayer with us, KPMG here on your gallon of gas, almost down under 3.00.
Oh, John and I are paying $2.70 down to Jersey Shore.
$2.70?
Sure.
Yeah, we produce our own. We consume our own.
Are you going to drive the Hummer through the winter?
The Hummer has been electrified, but it operates less efficiently when it's cloudy and rainy.
Okay. Got the solar panel on
solar
top
panels on the top.
Thank you.
Way to go, people.
Red and green on the screen now. NASDAQ up 0.6%. The VIX 14.19. With your news in New York City, he's electrified. John Tucker.
Well, more of President-elect Trump's controversial cabinet picks is scheduled to meet with Senate Republicans on Capitol Hill, including Robert F. Kennedy this week, Robert F. Kennedy Jr. for Health and Human Services, and Tulsi Gabbard as Director of National Intelligence. This comes after key Senate Republican Joni Ernst changed her tune last week on another divisive pick, Pete Hegseth to lead the Defense Department. Now, Bloomberg's Kayla Gardner has more from Washington.
Originally, she suggested that she was not yet ready to support Hegseth. And then we saw this pressure campaign really play out. We saw ads on Fox News by this Elon Musk backed group. We also saw her receive a primary challenge in her own state. She's expected to run for re-election in 2026. So we have seen her drastically shift over the last few days.
Bloomberg's Kayla Gardner in the nation's capital. SoftBank Group CEO Masayoshi Son is set to announce a plan to invest $100 billion in the U.S. over the next 4 years. This will come during a visit with President-elect Donald Trump today. This according to our sources. Son will give details of the plan, which includes a pledge to create 100,000 jobs focused on artificial intelligence and related infrastructure. Son forged a strong relationship with Donald Trump the last time he was president. Luigi Mangione may be in New York City soon, just weeks after authorities say he fled the city, leading police on a days-long manhunt following the murder of health insurance CEO Brian Thompson. Mangione is in a Pennsylvania jail. An extradition could be happening soon. He was arrested in Altoona last week, 5 days after Thompson was gunned down. ABC reports Mangione's mother spoke with FBI agents and detectives from the NYPD the day before his arrest. She indicated surveillance photos being circulated at the time could be her son. Apple's new vision for the future. It's a giant iPad-like foldable device. Sources tell us Apple designers are developing a product that unfolds into the size of 2 iPad Pros side by side. Company's been working on it for a couple of years now and is aiming to bring something to market around
Says the man with the flip phone.
2028. Well, that's on a Christmas list for one of the offspring. Fortified Estate, which installs bespoke bulletproof fixtures and panic rooms in the homes of the ultra-rich, had one of its busiest months on record. Over the past several years, the country's richest families have taken more interest in their personal safety than ever before, and sprawling Hamptons estates installing infrared and robotic cameras, they say, that allow homeowners to see and hear everything that goes on, even when they're on their yacht in the Mediterranean.
Exactly.
Global news, 24 hours a day, whenever you want it with Bloomberg News Now. I'm John Tucker.
Yeah.
This is Bloomberg. I installed Tree Cam in my living room.
Why?
So you get live pictures
of your trees?
Christmas tree. And over the weekend, I installed a Lionel train set underneath the tree.
Oh, did you?
Now, if you're on social media, you could post this to social media. But since you're not on social media, why don't you put it on the surveillance?
What are you laughing at? This is pretty cool.
Surveillance.
She ignores
Twitter
us all
feed or
day
whatever.
until what would you like to opine on, Lisa, please?
But it's
sad Christmas
it's
tree
such
at
an old train set. When you turn it on, it sparks underneath the fir tree that's all dried out now.
That'll end well.
That's a good
in the Highlands,
idea.
New Jersey people.
You mentioned the laser stuff. Afterthought put that in her bedroom. You know.
Oh,
she's
yeah.
She's got it all out there so nobody can come in.
No intruders. Why is somebody
Vet
going
bill
in her
goes in
bedroom?
and Vet bill goes in and triggers the laser off, and an alarm goes off in her bedroom.
Stay out. Stay out.
So kids got a countdown clock. When are you going to college?
Yeah.
We'll see. Red and green on the screen. Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
I'm going to Bloomberg Interactive Broker Studio. I'm Lisa Mateo. We've got stocks mixed, and this is as traders gear up for interest rate decisions by major central banks across the globe later this week. We'll start with the S&P 500 right now, up about 0.2%, 12 points. The S&P 500 has risen 27% so far in 2024. Right now at 6,064. The Dow, little change, down about 8 points, 43,821. The Nasdaq up 0.4%, 82 points at 20,010. We have the two-year yield 4.23%, down 1 basis point. The yield on the 10-year 4.38%, and that's down 1 basis point. We have the Bloomberg Dollar Spot Index up about 0.1%. The Japanese yen down 0.3%. The euro down 0.1%. The British pound up about 0.2%. We have Bitcoin. Well, Bitcoin up more than 105,000. MicroStrategy, a big part of that, it's being included in the NASDAQ 100. That's thanks to some of the optimism. And the company brought an additional $1.5 billion of the cryptocurrency through the sale of stocks. Shares of MicroStrategy up about 4%. Meanwhile, Super Microcomputer, well, they're dropping out of the NASDAQ 100. Its shares are down about 6%. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. One of the great things here, and it's amazing. Lisa gets in at 1:30 in the morning just to get the day started. Yeah. She's worker bee. And there's other people. I'm pleased to tell you about Tunis darkened the door 3 minutes early today. He's popping 9:27.
I saw that.
He works late though. I mean, he makes it.
See, here at Bloomberg, Tom, we've been doing transparency before it was even a word. So we know what everybody's doing. We know what their calendar is.
He puts in a full day.
We can't hide here at Bloomberg. We know
he gets to cocktail hour.
Exactly.
Like nobody. Eric Tunis joins us now. In the world definitive on ETFs. Okay, we got to do BitDog, but first I want to do what John Tucker was just talking about. I've seen this shell game no less than 412 times. You buy a participation in the equity markets from a buffer ETF, you're capped out, you don't get the rest of the upside, and everything that they got in parentheses here, this is one firm, I'm not going to mention the firm, before fees and expenses. Are the fees and expenses of a buffer ETF less than the fees and expenses 20 years ago for the same strategy?
Yes.
That's the major saving grace.
Yeah, but they're still pretty pricey compared to like a Vanguard fund. I mean, they're 90. Well, BlackRock introduced one, I believe they're 55. So there is a cost fee war.
55 basis points, half
points.
A percentage point.
Yeah, but that one doesn't have much assets. The two main issuers are First Trust and Innovator, and they're all between 80 and 100 basis points, which is why it's so fascinating, because the Vanguard era is here. It's so hard to find anywhere you can charge money anymore. And here come these buffer, and they found white space out of the clear blue sky, and they're doing well.
They found white space because it's a bull market, so you make your bogey, you lose the cap, but I made 11 or 12%, right?
Yeah, but two things. One, I think you're bringing up the story that Emily Grafeo broke, which was UConn's endowment is going from hedge funds to buffers. We've also found people going from bonds to buffers. If you cannot rely on hedge funds to hedge the market, and you can't rely on bonds to hedge your stocks, which happened in 2022, I can kind of empathize a little with wanting something else. And with buffers, it's locked in. Like these other things, like long-dated treasuries, I mean, the VIX is pretty locked in, but the deterioration of your portfolio while you own VIX is so brutal, it's almost not worth the insurance. But VIX is a reliable hedge. But the other ones are shaky. Gold, treasuries, they're shaky.
I don't disagree.
Know. Yeah, so the buffers are like, we're guarantee it. And I think that peace of mind is something more and more people are worried about because...
They're basically, Paul, picking up a bond. I mean, it's basically taking equities
as a public
into
service,
a bond equivalent.
As a public service announcement, I have to define what a buffer ETF is for our listeners, because Lisa and I are looking at each other like, what are these knuckleheads talking about? All right, defined outcome ETFs, buffer ETFs. They use options contracts to limit losses while capping upside potential. Okay, so that's and there are 327 buffer ETFs representing more than $54.8 billion in assets. So it's a thing out there.
Yeah. What makes them unique is they come out in quarters, so you're supposed to buy them right when they launch, so that way you buffer from the beginning. Now, you can buy them after a couple weeks or whatever, but you don't quite get the same dynamics. But if you buy them on the day they launch, for example, one from iShares is called MaxJ. I think the cap is 9-10% on the upside, but the downside is 0. So that's a lot of people are like,
you can't lose any money.
True.
That's okay.
Yeah.
Bitcoin, we got to go there. 106,000 a day. I still haven't placed my first odd lot order. Help us here. When does this? I'm going to get a lot of hate mail. Eric, let me be constructive. Give us the optimistic take to taking advantage of Bitcoin today.
Look, it's complicated. I think, to me, Bitcoin is a very speculative asset right now. It's a high risk asset. It's gold in that it can store value, but it's not gold in how it moves. Like I said, it's like teenager gold. It's like it's literally 16 years old. And you know how 16-year-olds behave, right? This is Bitcoin. No. Yeah. So I do think what is going on is you have a lot of people in 60-40 portfolios. They've been in them for 20 years. They believe in compounding, but they're bored. It's like watching paint dry. So there's been an opening for hot sauce. And so whether it's ARK or single stock trading, single leverage stock ETFs, Bitcoin fits perfectly in that hot sauce bucket as a pure rank speculation, something that you don't want to kick yourself later just in case it goes up. I would argue ARK plays the same role in a portfolio. So we have found a real legit opening for stuff that has almost no correlation to your boring vanilla stocks and bonds. And so that's why I think it's being adopted by a lot of these other firms. Now, the narratives are growing. The Trump win obviously brought these new narratives besides just the ETFs. So now you got Larry Fink, you got the president, you got Fidelity. I mean, it's just like
Balchunas.
He's been there since
I'm
day
a boggleheaded heart, and and I defend Vanguard to the crypto people, and that bothers them. So
Paul,
I'm not full crypto here.
Paul, get a question in here. Paul and I had a 50-50 bet whether you'd show up or not.
Exactly. How much of this move to 106,000 on Bitcoin do you think is because of ETFs? Do you think? Do you have any sense? Is there any way to measure that?
Yeah. So I've also upset the crypto crowd with this one. Bitcoin was like 20 grand when BlackRock filed for the Bitcoin ETF. Since then, it went up to about 70, and I credit ETFs for almost all that.
Okay.
Now, from 70 to here, I want to give, I think, and that's what's, honestly, I think the ETF was going to last for a while, but these new narratives have helped a lot.
2 standard deviation weekly chart, a negative 2 standard deviations is down 60,000 for Bitcoin. You said it doesn't trade like gold. Does it trade like a meme stock? I mean, you know where I am on this. I don't think it trades. I don't think it's legitimate. Good morning, hate mail. But is in your head that volatility for ETF owners?
Yes, and this is something everybody should be aware of. There's been like 80% drawdowns in Bitcoin. I mean, that's no joke. 80% that's what ARK went down. Now, I will say, ARK is a good bellwether in a way to explain that ETF investors, especially ones that have a 60-40, might have more intestinal fortitude with their hot sauce because they got the vanilla stuff covered. This isn't their nest egg. And so we've seen a couple sell-offs with the ETFs. The boomers, so to speak, have held pretty well. And only 96, 97% of the assets stuck. That said, I do think that's going to lower volatility. If you have these better ETF holders, institutions, advisors who are not relying on Bitcoin for their net worth and they're not retail degens, that should help with volatility. Yeah. I mean, what is that? Come on, you know.
Yes, I do. I'm just making sure I heard that right.
That will help buffer the volatility. So we think the more ETFs grow and institution adoption happens, the lower the volatility will become. That doesn't mean there can't be some massive unwind. There's always that sort of tail risk. But I don't see it. I don't see all the ETF investors, the 108 billion that's in it. If it goes down 30%, they're not all running for the hills. Maybe like 10% of that.
How's the new Vanguard? Oh, blue button here, quickly, 20 seconds. How's the new Vanguard management doing?
Good.
They got a plan.
They're really pushing active fixed income right now. I think they should do active equity as well. We'll see. And I think
had someone earlier today said active fixed income's actually working out.
It is. People love bond managers. It's worked the whole time, so it makes sense for them to get an active fixed income.
In our meeting, we have a 3 o'clock meeting when you're just going to bed. We have a 3 a.m. meeting, and we said we need a song for Eric Balchunas. And what could it be? After BitDog ETFs, Andy Williams. Good morning, everyone.
Mistletoeing and hearts will be glowing when loved ones are near. It's the most wonderful time. Yes, the most wonderful time. Oh, the most most wonderful time.